There we are, we're live. Hi everyone, this is Thomas Newman from Viva Financial Tuition, and I'm joining my colleague Hugh Martin today.
Thank you very much. Hello everyone.
And so I see we've got about 68, 69 attendees so far. I imagine there'll be a few more coming in over the next couple of minutes. Hugh will be doing the analysis of the first half or so of the pre-scene over the next sort of 2 hours. And this is the first session that Viva is doing for the OCS for May 2021. So we're going to be running a number of live webinars and indeed live workshops, which I'll talk about as well in a few minutes. So we're up to 81 already. So I think we're going to have a few more coming in. So there's a chat box there to the right of the webinar. So if you click on that icon, you have the ability to type your comments in, and Hugh will be making some time at the end of the webinar for questions. So I think we'll probably have a little bit of a break as well at about the halfway mark. So once we're about an hour or so through, Hugh might want to stop for 5 minutes or so. Everyone can have a breather, and then you can come back for the rest of the analysis. So before Hugh makes a start, you have to put up with me, because I'm going to just explain the course overview for this window and to let you know what classes we're actually running. So give me 5 minutes or so, and I'm going to share a screen with you now. Just hold on.
I see there's a question about volume. Yeah, I can hear you fine. Okay. I'd say that's probably on your side, KSJ.
So let's see now. Just bear with me. Okay, so. Okay, I think we can see that. So this is an overview, basically, of Viva's course for the OCS for May 2021. For those of you who are not familiar with Viva Financial Tuition, just a couple of points. We're very, very experienced when it comes to the analysis of case studies. We've analysed about 48 cases over the last 4.5 or so years. That includes the OCS, MCS, and SCS. Over that time, we've dealt with about 7,000 students taking various CIMA exams. We run a lot of live webinar sessions. This year, I think we're going to be running about 150 between the case studies and objective tests. And in the last few months, we've been getting very, very solid reviews, 4.7 out of 5 for the most recent webinar events that we've been running. We are CIMA specialists, so we only focus on the CIMA qualification, and it's our bread and butter. The fact that we were born online, we've always been an online tuition provider, means that we don't have a lot of the big legacy costs of other very established tuition providers. So everything is online. We have a small team dedicated only to CIMA. That allows us to save on costs, and we pass those savings on to students in the form of a much lower price compared to other tuition providers. And recently, we're very, very proud to have been listed on a list of just 6 tuition providers worldwide that achieved CIMA's Global Pass Rate Excellence Award. So that means that our courses, the ones we ran in 2020, we had students exceeding the CIMA averages. So very, very big achievement for us. And I'll talk a little bit more about that in just 1 minute. We've got great reviews from our students. You can see there at the top of the slide. A quote from one of our former students, Andrew Sherwood, a former world prize winner for the OCS, actually, who took the case with us a number of years ago and felt that we were instrumental in helping Andrew to achieve that world prize. And we do have a great mix of students, from all over the place in terms of location. We deal with world prize winners. We deal, with also students who are facing very, very trying circumstances. And we're very, very proud to be able to deal with students in that range of circumstances. So the CIMA Excellence Awards for 2020. There we have the CERT, Global Pass Rate Excellence. The winners were Viva, Kaplan, BPP, HTFT, First Intuition, and Wisdom. So you probably recognize some of the other names on the list. And as I said, we were particularly proud to have joined this elite group because we are dealing with courses. We've typically set up courses at much lower price points. So a big achievement. And I think the stamp of approval from CIMA is one that we very much valued. Okay, so the tutors for your course, the OCS course in May 2021, I won't actually be teaching on this course for, I think, the first time since its inception, but I'm passing the work over to a very trusted team. So Hugh will be the lead really for these sessions. He's going to be taking the pre-scene analysis, P1 applied session, the key issues session, and he's a former CIMA prize winner himself. Hugo Newman is the co-founder of Viva Financial Tuition. He's our E-expert, so E1, E2, E3, and also very expert in the delivery of industry analysis, which he's been doing for the last 4.5 years. We have Leanne Rowell, a very experienced financial reporting tutor, formerly a BPP tutor. She'll be looking after the F1 applied session. And Kelly Davison is a former Kaplan tutor, very experienced as well, right across the CIMA syllabus. She'll actually be handling the OCS Elite course, and I'll talk a little bit more about that in a minute. So you have two options to unlock the entire OCS course. Okay, so this is just class 1 in our OCS course today, which is a free class. To unlock the other classes, you'll need to pay something. So you have two options. You've got all access, and you've got the OCS Elite course, okay? With all access, it's a subscription to everything at vivatuition.com. So you've got access to our entire library of content. It's about 1,000 hours of CIMA course content right across the entire CIMA professional syllabus. That's from E1 through to the SCS. And you've access to that for 365 days. With that, you unlock access to 7 live webinars for the OCS, and 3 mock exams for the OCS, but that does not include marking, okay? So that's all access. Typically, we sell 1 year of access with all access for £299, which in itself is a very good price. We're going to reduce that price for the next 48 hours to just £229, okay? And there's an offers button in the right-hand side of the webinar that you can click on. You'll see it's just below the chat icon. And you can click through to that special offer. As I said, it's running for the next 48 hours, so you can avail of that special offer there. So that's one option. The other option is what we call our OCS Elite course. And this is, we think, the most complete OCS course on the market, bar none. That's the goal anyway. And certainly the feedback from students for the first Elite courses we've run has indicated that they are very satisfied with that particular course. So the OCS Elite course includes all demand access to everything on the website, so vivatuition.com, for 60 days. Okay, so that's for the duration of this exam window. So if you want to go and look at the E1 course or the F1 course or the P1 course, you can jump into those. So in a similar way that you can with all access. The difference is, with all access, you get access to everything on the site for a full year. With the OCS Elite course, you get access to everything on the site for 60 days. You also get access to the same 7 live webinars for the OCS, and I'll tell you what they involve in a minute. And you get access to 3 mocks as well. The difference is, though, between the OCS Elite and the All Access is that you get access to the mocks plus marking is included. So you get all 3 of those mocks marked. You also get with the OCS Elite course an additional 6 live workshop events. They're 2 hours each. So that's an additional 12 hours of live workshops. And I'll tell you what's included in those live workshops soon. You also get 2 30-minute one-to-one calls with your tutor at the start and end of the course. So really useful for discussing your strengths and weaknesses, your history as a CIMA student, and based on that, your tutor will be able to give you very personalized feedback as to where you need to concentrate your efforts over the next 2 months or so. And finally, there is a pass guarantee included with the OCS Elite course. So if you fail, for example, in May, you get free access to the OCS Elite course for August, which is the same case study. So very, very useful. So there are the differences between the two. The OCS Elite course, typically the price is £699. So you pay a £99 deposit at the start, and the remaining fee you can pay over up to 6 months. It's up to you. However, for the next 48 hours, we're running that at a discounted price of £599. Okay, so after this webinar session, what I'll do is I'll send out an email with the links to the All Access special offer and the OCS Elite special offer. So the first part of this course is the live webinars. So we've 7 live webinars. The first one you can see is today, the pre-scene analysis #1. So that's a walkthrough of the first half of the pre-scene. Okay, that's today. That's a free session, and that's the one we're doing today. The other 6 webinars you see there, industry overview, which is tomorrow, a look at the real world industry, the second half of the pre-scene analysis, which comes on Monday. Then we have a little bit of a break, and we recommence on Tuesday, 13th of April. That is the E1 applied session. So what we do there is we take the 5, 6, 7 most important E1 theories that we've identified, and we talk about them in the context of this pre-scene. So very, very practical. We do the same with the F theories, F1. We do the same with the P1 theories. So very, very practical sessions. And then the way we tie it up then on the 24th of April is with a key issues session. So we talk about the 10 most important topics and how they might be examined. So they're the 7 live webinar events, and you get access to those with All Access, and you also get access to those with the Elite course, okay? The other elements then included with the All Access and the Elite course is the on-demand content and mock exams. So you get theory reviews on the website. There are short reviews of E1, F1, and P1 to refresh your memory as to what the main topics are in each of those subjects. You also get a series of videos on preparing for the case, understanding your role, using the pre-scene well, how to apply theory on the day of the exam. And you also get a series of videos on the strategy that you take on the day of the exam. And so many students, you know, they have a lot of knowledge, but they're not actually great when it comes to exam techniques. So this series of videos will help with that, how you manage your time, how you tailor what you write to what the examiner is actually looking for. As I said before, you get 3 mock exams. They also include model solutions, and you get access to the full E1, F1, and P1 courses. So you can dive into those if you really need to review a particular theory point that you're weak on that has been flagged up by your tutor, for example, and you can go and review it there. So that's All Access and Elite. Gives you access to those that group of content too. So if you're interested in taking just All Access, which would unlock all of that, register for webinar 1, which is this. You've already done that. It's a free session. You would purchase the All Access at the discount price of £229, which you can do through the link in the offer section or the email I will send out after this webinar. And once you've done that, Viva will email you today or tomorrow before the next session, and we'll email you the remaining webinar links. So that would be the next 6 sessions: the industry analysis, pre-scene analysis part 2, E1, F1, P1 applied, and the key issues. And you'll be added to a Facebook group. So that's a student group. That's a student group that is, there's a lot of student activity there, so you can help each other out. It's not really a group that you have a lot of tutor input or any tutor input really on. There is another group for the OCS Elite course, however, that the tutor is very, very active in, and we'll talk about that next. So if you've got any doubts about the All Access offer, please send us an email at info@vivatuition.com. That's info@vivatuition.com. Okay, so that's the All Access offer. The Elite offer then includes all of that you've just seen, plus these workshops. So these are 2-hour events, very, very interactive sessions. And the thing about the Elite course is that we only have 20 places. We intentionally keep the group size small so that we can pay a lot of attention to each student that comes on this course. So lots of attention from your tutor in the form of, the calls that you have, responses via email, etc., and the community that we have for our Elite course students. So these sessions, very practical, very focused on exam technique and answer writing. So the first session is on a detailed overview of the exam and the marking process, so that you understand that well. Second session is how to apply theory, how to generate ideas for answers. Third session is answer construction, how you put your answer together, what constitutes a good answer, and how you manage your time. Then in the fourth session, it gets it goes into a lot of detail on what a good answer looks like. So it takes a model answer for this particular pre-scene and tells you why this is a good answer. What are the components of a good answer? And then it also looks at a bad answer and what you need to actually avoid. So very practical. The fifth session, exam style question practice. And the sixth session, exam question practice and final recommendations. And in all of these sessions, as I said, highly interactive. So there's always, before each session, the tutor sends out a document asking you to detail any questions or doubts you would particularly like addressed in the session that will take place the following day. So you get all of your doubts dealt with. With the Elite course, you also get access to the private Facebook group. Now, this is an active group, meaning the tutor is very active there, is going on there every day, is dealing with the student queries coming through, is setting scenarios and questions, additional questions and scenarios, and responding to your responses. So very, very active and very, very useful. So we think we put together something that, as I said, the most complete OCS course on the market. So, the winning formula we think is as follows. It's coaching in the form of those one-to-one calls that you get, 30-minute call at the start of the course, 30-minute call at the end of the course. You can reach your coach at any time during the week. So you can be sure that your coach will get back to you within 24 hours via email. And as I said, summing up the live webinar events, the 7 live webinars and the 6 2-hour workshops, you've got about 22 hours of live classes there. You also unlock the on-demand content at vivatuition.com for 60 days, and you get those mock exams with marking. So very, very important that you have an experienced tutor mark those exams, tell you where you're going right, what you're doing wrong, so that you can take corrective action. And you have that Facebook group there, active Facebook group with tutor input. So we've seen very, very good results so far with our Elite courses. We ran these for the first time in November of 2020. We did the same in February 2021. And what we saw was that students were coming on and improving their scores from, examples here. Angela came on the course for the MCS in November. First mock attempt, 44%. So that's a fail. And by the end of the course, her last mock attempt, she scored a 72.5%, which is a really good pass mark. Elaine was really struggling. She had 31% in her first mock. And when she went through the course, 60% by the final mock. Liam was already doing very, very well, 77% in his first mock, got it up to 86% by the final mock. So we see, this kind of course works very well for two kinds of students, really. Students who are kind of struggling and are unsure about how well they will do, and also students who want to do very, very well. So very ambitious students. They're the two groups of students I would say the Elite course works very, very well for. Okay, so the next steps, if you want to take the Elite course, book your place with a £99 deposit. And already from of the 20 places that we've available, 8 of them are already taken up. So there are only 12 places left. And so you will need to act fast if you want to book your place on that course. So you pay a £99 deposit. Then, you don't need to pay anything else for another month. And let's say you want to pay the remaining £500 over 5 or 6 months. Let's say it's 5 months. You tell us, it's up to you. Then you would pay £100 next month, £100 the following month, £100 the following month, etc. So once you've booked your place, Viva will prompt you to schedule your first call with Kelly next week, who is the coach that you have for the OCS Elite course. We will give you all access membership today or whenever you pay immediately, and you'll have access to everything on vivatuition.com for 60 days. And Viva will email you the remaining links to the 2-hour workshops. We will send you the remaining webinar links as well for the remaining 6 sessions. We will link you to the private Facebook group, and we'll send you a terms and conditions sheet for signature before you commence the course. Okay, any doubts you have, please email us at info@vivatuition.com. Okay, and that's me done. So I hope that's clear. So there are two good options really for participating in the full course. Both are very good. Both of their merits, and it's up to you entirely as to which one you want to go for. And if anything is confusing or not clear, please do email us at info@vivatuition.com. So I'm going to leave it there, and I'm going to hand over to Hugh, who's going to walk you through the first half of the pre-scene. Thank you very much.
Brilliant. Thank you very much, Thomas. And just to note, there's a question there from Ryan, which is just a good question before you go. Thomas, is about, well, if you've already got all access, what happens then with the elite course? But how does that work?
Very good question, Ryan. So I'll just address that. So if you are an all access member, you have a further discounted price. Okay. So if you've already paid for all access, you can avail of the elite course for just £499. So even lower price. Okay. If you're not an all access member, the standard price is $699, but we're reducing that to $599 for the next 2 days. But if you're all access already, it's $499. Good question.
Brilliant. Okay, and I'll be here to answer questions on all access and elite courses at the end as well. So if anyone has any questions, you can store them up and I'll answer them at the end. Okay. So what I'm going to do is I'm just going to share my screen. I'll put up the pre-scene document and I'll just double check that everyone can see it okay. Okay, so is that okay, Thomas?
Yeah, I can see it, Hugh.
Okay, brilliant. So I'm just going to go through this analysis. We're going to get stuck into it now. Okay, so thank you very much for joining me for this session. This is the pre-scene analysis of Accelerate. So this is the OCS pre-scene for May-August 2021. Okay, so there's a lot of content in this particular pre-scene document. It's one of the biggest ones I've ever seen. So we're going to get straight into it. Now, there's just a note here at the very beginning. Okay, so you'll see a note here in regards to COVID-19. Okay, so I'm just going to very quickly run over this. Okay, it's not something that we're going to spend loads of time on, but it just says here in regards to COVID-19, the pre-scene and the case study in general, while aiming to reflect real life, are set in a context where the COVID-19 pandemic has not had an impact. Okay, so that's just something to be mindful of. And there's really good advice here from CIMA in regards to COVID-19, should you factor it into your answer. It says just at the bottom, candidates may find it helpful to assume that there are no restrictions to the movement of people, goods, or services in place. So what they're saying here is that we should perhaps assume that COVID-19 has not had an impact on this business. If there are relevant points in relation to questions being asked and you're making references to the pandemic or social distancing, they will be marked on their merits. My personal advice to you is to stay away from mentioning the pandemic if at all possible. I think it just makes it easier. Okay, so the overall advice here is just to assume that it's not had an impact on this business. Okay, so let's have a scroll down. Now you can see here there's a table of contents. This is very, very standard for all pre-scene documents. We don't need to look at this too much, but it just gives you a summary of everything that's to come. Okay, so let's have a look here at the first page. Now, this is the job and role outline. So this is very, very standard here for an OCS pre-scene. So in this particular case, you are a finance officer for a company called Accelerate. Okay, so that's how I'm going to pronounce it. You could pronounce it maybe Accelerate. Doesn't really matter too much because you'll be writing it down, of course, inside the exam. So you're a finance officer. Now, what does that mean? Well, typically a finance officer is someone who assists decision makers. And in this case, you're supporting a finance manager called Ethan Tennant. And we're going to learn a bit more about Ethan as we go through this pre-scene analysis. Now, what is the role of a finance officer in the real world? Well, typically a finance officer would be someone who has worked maybe 1 to 2 years in a professional capacity. So as someone who's just entering the finance profession. Very often, you're tasked with dealing with short-term issues, short-term horizon, financial related issues. That could include, for example, putting together the monthly accounts, okay, putting together the budget, helping with financial reporting queries. Very often there's a wide range of duties that would be given to a finance officer. Now, in terms of interacting with the operational level, what would a finance officer be expected to know? Well, costings, for example, that would be related very much to P1, including digital costing, which was a new topic introduced in the 2019 syllabus. Putting budgets together, so budgeting is a big part of P1 as well. Variance analysis, working capital management, which is an F1 topic that was introduced following the 2019 syllabus change. Cash management as well, another F1 topic. This is what a finance officer would be expected to help out with, essentially. And risk assessment as well. Now, that's not an exhaustive list. There's lots of other areas that a finance officer would cover, okay? But this is just a sample as well. And there's actually, some information here that CIMA give to students. You assist with the preparation of financial statements and deal with any queries regarding financial reporting. So you have to know your standards, okay? So IFRS 16, IFRS 5, IAS 10, IAS 2, okay? So you have to know these standards well, because you could be giving advice in relation to those standards. As well, just a note, this is a car rental company. And if you want to look at some real world examples, we'll be bringing these up again. Hertz is an organization that's worth looking at. Avis, Enterprise Rent-A-Car. There's many, many others, but those are 3 big companies that are easy to find information on. Okay, so let's go to the next page here. So as we scroll down, we see that we have this overall summary of the organization, Accelerate. Now, some of the points that are made here will actually be drawn out in more detail at a later stage. So if there's something that perhaps I say that you don't understand, don't worry too much, because this is just giving us a summary, okay? And we'll be talking a little bit more about some of the issues that we're talking about here at a later stage. So they'll be kind of drawn out a little bit more. So as we said, the company is called Accelerate, and it's a leading car rental company. Okay, it's based in Everland, which is a fictional country in Western Europe. So Western Europe, let's just think about that. What are the pros of setting up a company in Western Europe? Well, Western Europe typically has good infrastructure, skilled workforce. Often the workforce can speak multiple languages. Local customers tend to have high purchasing power as well. What are some of the cons? Okay, expensive to operate very often, and as well, a large amount of bureaucracy, regulations, rules. Now, some of you may be thinking, well, what is Western Europe? What are some real examples of that in the real world? Ireland would be an example, the UK, maybe France as well. And it says that Everland, the country that this organization is based in, has a population of about 72 million. It's somewhat in line with France. Okay, so France has a population, I think, 60 something odd million. So it's quite similar to France in that respect. Now, this country has the e-dollar as its home currency, again, a fictional currency that you will see being quoted later on in the financial statements and in other areas of this pre-scene as well. Okay, some really interesting information here straight away. So we find out that the company had a sales revenue figure there of 206.3 million e-dollars in 2020. So their end of year period is the 31st of December 2020. But this is actually a decrease of 25% from the previous year. So what happened here? Well, you can see it highlighted. There was a global economic recession which impacted the business throughout most of 2020. And this is so important because this recession really factors into lots of different areas of this pre-scene. Okay, so it had a drastic impact on the business. You can see there a decrease of 25% from the previous year. As well, it incurred a loss before tax of 0.8 million e-dollars compared to a profit before tax for 2019 of 11 million e-dollars. So we were previously profitable, then we had the recession, and now we're loss making. Okay, so that is not good. Okay, so you can see there that this recession has clearly had a significant impact on the business. And think about economic recessions. You know, they have a very large impact on people's purchasing power. Okay, so that puts pressure on prices, that puts pressure on demand. Okay, so think about all these different things as we go through the pre-scene document. As well, just be conscious, again from F1, taxation is tested a little bit, okay, not too much, but the concept of carrying forward losses, okay, most tax jurisdictions in the world allow you to carry forward losses to allocate against future taxable profits. In this particular case, I believe in Everland, it's confirmed at a later stage in the pre-scene, that is allowed, okay? So that's something from F1 just to be conscious of. Okay, so the company was formed in 2002 by Joseph Waller, who is the current managing director. So the person who started the business is the current managing director, and we'll talk a little bit more about that at a later stage. Now, the company's development, it was initially slow. And why is that? Because it had severe competition from global car rental brands, okay? So you'll see that at this particular company, Accelerate, it is a national company, so it just operates in Everland, and it faces severe competition from the global players who perhaps have maybe a cost advantage because of economies of scale. Okay, we don't know that for certain, but that's likely the case. However, between 2010 and 2019, it grew rapidly. And how did it grow? It exploited its homegrown credentials and commitment to quality customer service. So it's a quality brand. They pay attention to customer service, and also they're appealing to the fact that they are a local organization or a homegrown organization in Everland. Okay, now this may seem obvious, but the company operates under the Accelerate brand. We'll see later why that's important, okay? So they operate under just a single brand, Accelerate. And that brand is a high quality brand. We offer a high quality car rental service. Rental fees are generally above those of value branded car rental companies, okay? So we're more so operating at the premium end of the market, okay? Which is really important to note, because if we're operating at the premium end, we have to have good customer service. We have to maintain a good reputation. We have to treat people, very well. Okay, we have to really show our customers that we care about them. And you'll see that as we go through the pre-scene kind of being repeated over and over. Now, it says as well that we mainly service the business and premium leisure segments of the travel industry. So you can see here two main customer groups: leisure, which would be tourists, and then business, which is, people going maybe abroad for meetings or maybe for sales presentations, for example. But there's two different customer groups that we learn a little bit more about later on in the pre-scene document. Now, the company operates a number of sales locations throughout Everland. And some of these sales locations are close to airports and some of them are not. Okay, so you'll see this term being used on airport, which means it's near an airport, and off airport, which means it's away from an airport. Each sales location is supported by a car maintenance center, which is located close to the sales location. And you'll notice here, which is quite interesting, the sales locations and the maintenance centers, the properties associated with them, some of them are owned by the company and others are leased. Okay, so just looking at that, that would suggest to me that you have to know IAS 16 from F1 and also IFRS 16 from F1 as well. You have to know those standards quite well, because you could have a question where perhaps maybe we're selling a building, maybe we're purchasing a new building, the depreciation policy changes perhaps, maybe we lease a new building, for example. How would we approach that? What would be the financial implications of that? So it's really important that you revise those standards and that you're able to apply them in this circumstance. We'll learn a little bit more about leases as we go through the pre-scene, but again, it does pop up in other areas. So it is an important standard to know, IFRS 16. Okay, so in response to the reduced demand, now remember we had this global economic recession, so that's why we have reduced demand. And in an effort to lower costs, the number of sales locations was cut in 2020 from 155 to 117. Okay, and it says as well that the main closures were in off-airport sites. Now, there were some maintenance centers closed as well, okay? And what this would suggest to me is that it's important that we understand IFRS 5, non-current assets held for sale and discontinued operations, which is on your F1 syllabus. Now, the standard is quite simple. It's not that long, okay? But just consider the fact that we're closing down different sales locations. That could involve selling equipment, could involve selling buildings, for example. So you could be tested on applying that standard. So I really recommend you have a look at that standard, you revise it. It's quite a simple standard. So I think it would be a good one to understand for this particular pre-scene. Okay, so now we learn a little bit more about the company's rental fleet. Now that word you'll see being repeated over and over, fleet. What does that mean? That's basically the group of cars that we have. Okay, so the company's rental fleet, the group of vehicles or cars. Now you'll see this, and this is a really interesting part of Accelerate's business model. So the fleet consists of a mixture of company-owned cars and cars subject to repurchase agreements. Okay, so what is this? A company-owned car is where Accelerate just own the car outright. Okay, so very, very simple. They've just purchased the car. But a car subject to a repurchase agreement, which we learn a little bit more about at a later stage, but I'll tell you now, is really, it's a car where the manufacturer gives us a guaranteed price that we can sell the car back to them at. Okay, so that's important, and we'll come back to that again, as I said, but basically we have a mixture of cars. We have company-owned cars, so we own them outright, and then we have cars subject to repurchase agreements, and those repurchase agreements basically state that the manufacturer will agree to repurchase the car at a certain price under certain conditions, okay? Typically, the holding period of a car is about 12 months. Okay, and as well, just to note that the fleet changes in size. Okay, so during the kind of more busy periods, we would have more cars. During the more quiet periods, we would have less cars. Okay, so the fleet is not fixed; it does change throughout the year. And as you can see there, the fleet was reduced during 2020 by a mixture of disposals and non-replacement when the car repurchase agreement expired. Now, disposals again would suggest that you need to know IAS 16. How do we account for a disposal? Okay, so just be conscious of that. As well, you can see the figures. It currently has a fleet of 15,000 cars, which is down 4,995 from the previous year. So we had a very drastic decrease in our fleet. That's likely due to, again, this global economic recession. We're scaling down because of the lack of demand, and that's going to give us a cash inflow. Okay, so just think about that. That cash is going to be very useful if we're looking to perhaps expand into different areas or maybe recuperate some of the losses that we had in 2020. Okay, now you can see there that there is this note in regards to seasonality. So the demand for car rental is at its highest during the summer months. Now that makes sense because if you think about it, people are on holidays very often, they're on vacation. We've had more tourists you would expect during the summer period. So this particular company, there's seasonality. Now remember, seasonality comes into P1 through time series analysis. So we would expect to see a seasonal impact in our forecast. We would expect to see an increase in summer and perhaps a decrease in winter as well. Okay, I think there's a really interesting note here just at the very end of this page. The actions taken by the company in 2020, such as reducing the fleet size, closing some sales locations, maintenance centers, have been proven to be effective in enabling the company to survive the worst effects of the recession. So yes, we had a very tough year for 2020, but the actions we've taken are going to help us recover, okay? So it seems as if the company is kind of poised now to perhaps recover from that period. It's not the case that, the company is just winding down, it's going to shrink in size and that's it. It looks as if the recession, yes, it's had a drastic impact on the business, but now we're going to bounce back. And we see that as we go through this paragraph. So it says the failure of some companies operating in the market has provided opportunities for Accelerate. So there's some new opportunities now. There's less competitors. Okay, so I think that's really something important to note there, that we're not just letting the business shrink in size. We're going to take advantage of this opportunity. As well, the financial performance for the first quarter of 2021 was in line with budget. Okay, and senior management believe that the company's in a solid position for future development. So really, the global economic recession, it's almost an opportunity for the organization. Okay, so let's go to the next page, which is all around the company's services. So here we get a very comprehensive view of the basic services that the company offers, as well as some of the additional and ancillary offerings that they have. So the company, what does it do? Well, it says here, and it's a very neat summary, the company provides car rental services throughout Everland. Okay, so very simple summary there. Car rental services, I'm sure if you're watching this, you have used or you have seen before a car rental lot, maybe in an airport or maybe in an industrial center somewhere. So this is essentially what the company is doing. It's providing car rental services. Okay, so the company, what is the basic offering? What is it that their kind of core product is, I suppose? Well, customers can rent a car for 1 day or for a period of up to 1 month. Okay, so that's the kind of core product of the organization. And the fee for that car, it depends on the length of the rental period and the size and type of car hired. So this makes common sense, okay? So if we go to, perhaps a rental car organization in an airport and we look to get a car hired, typically speaking, the larger cars, the Jeeps, the Range Rovers of this world are more expensive than the small cars, okay? So that just makes sense. If we're getting a larger car, maybe a more luxurious car, you would expect to pay a higher price for that. Okay, so the company's rental fleet, it's consisted of a wide variety of cars, so different sizes, different transmissions. So we have manual and automatic. We also have diesel, petrol cars, small number of electric cars, which is important if you think about it from a CSR perspective, corporate social responsibility, which is an aspect of E1. It's important that we think about the environmental impact of the cars that we have. And over time, you would hope that we would transition more so to electric cars. Additionally, as well, we have this offering called Prestige Cars, which is the luxury offering. These are more luxurious cars, which appeal to the business market and also to leisure customers who are looking to indulge a bit on their holidays. As well, and we see this coming back into the pre-scene, the average monthly car rental fleet size typically peaks in the summer months. And that makes sense. Again, people are on their holidays, we have more tourists. You would expect this to happen. Okay, so the car rental fee includes basic insurance, okay? And the car has a full tank of fuel on collection. And when customers bring the car back, it's expected that they would have that full tank of fuel there. If they don't, the customer is charged for the shortfall. So that means that we've taken that risk of customers perhaps not giving that full tank of fuel back to us. We've taken that risk out of our business model. So we've put the onus back on the customer. Okay, so here we have some information in regards to how customers can book their car rental. So customers can book the car rental online, okay, or they can use the app as well. So we have a website and an app, and we'll learn a little bit more about those at a later stage. But it's important just to see that the company is somewhat digital savvy. Okay, we're using some digital technology here, really, really useful to get this data on customer behavior. So this is really, really good. Okay, we're seeing that the organization is using technology. It's creating an efficient booking process. Would appear to me that it's quite a straightforward process. You just book it online. But as well, they do have a sales location on arrival process where you turn up to the sales location and you can do it there and then. But customers run the risk if they don't book it online that perhaps there's no cars available, might not be in the type of car that they want. So it's actually better for customers to book online, and it's better for Accelerate as well, because we get that really good data. We get that analytics. We get to see customer behavior on the website, which lots of organizations are capable of doing these days. It's quite simple to look at, online analytics, customer behavior on websites, really, really good information for, most businesses that operate a website or an app. So that information is invaluable. And it's also a part of E1. Okay, so digital technology, big data analysis, business intelligence. So all of that kind of interacts with this small segment here. As well, car rentals can be booked via third parties. So perhaps hotels, airlines, other third-party brokers. This is very, very common in the real world. So if you ever go to book a flight, I remember doing this maybe 3 years ago. I booked a flight to France. And as soon as I booked the flight, straight away, I get an ad for booking a car rental, and you get a discount if you book through the airline. So in this case, in the pre-scene, this is also the case. So we have these third parties, could be hotel, airline, other third-party brokers, and Accelerate pays a commission to those third parties. So it's a good thing that they're providing us with extra sales, but we do pay for those sales, so it eats into our margins, okay? And we'll learn a little bit more about these third-party brokers at a later stage, okay? They come back into the pre-scene at a later stage. Okay, so additional rental services. So we have 3 main additional rental services here. The first is the long-term car rental. So this is quite straightforward. It's where you can hire a car for periods between 1 month and 3 months. Okay, and it's charged at a fixed fee per month, gives you an enhanced level of insurance cover, which you would expect. There's a restriction on the total mileage, but you can pay an extra fee to increase your mileage. There's deliver and collect as well, which is where Accelerate will basically deliver the car to your place of work or maybe your home address, and then collect it as well when you're finished with it. So this is a product, in my personal opinion, that's targeted towards busy people who are willing to pay for convenience. Okay, so this is a kind of a convenience-based product. Then we have one-way rentals. So what is a one-way rental? This is where a customer collects their car from one sales location and then they return it to another. So say, for example, I'm in London, I rent a car, I drive it all the way to Birmingham, and I leave the car in Birmingham. So that's a one-way rental. Now, This comes back into the pre-scene at a later stage. It's actually quite interesting to think about it from the perspective of budgetary control. So if the two sales locations have different budgets, and for example, a customer damages the car in transit, which area would take that cost? Okay, so there's no right or wrong answer here, but it's just something to think about in terms of responsibility accounting. Which center would it be fair for that center to take the cost, okay, of damage? So again, just things to think about in regards to how the pre-scene relates to the operational level. Doesn't mean that there's going to be a question on responsibility accounting, but it's just something to think about. Okay, ancillary products and services. So we have some ancillary products here. Most of them are insurance related. So the first one is collision and loss damage waivers. This is basically where you pay a fee and Accelerate then agrees to relieve the customer from financial responsibility if the car has been damaged. So if you damage the car, you're no longer responsible financially for that if you've paid that damage waiver. As well, you have some additional liability insurance, which is useful. Okay, so you can basically top up your insurance. So if you do have perhaps damage, or maybe you've been involved in an accident, and you've increased that liability insurance. As well, there's some products here for driving convenience. Very often you'll see these inside real world car rental companies, things like roadside assistance services, portable navigation units, and child safety seats. So these are what we would call upsells. And very often these are high margin products, services, extras essentially. And in the real world, this is how a lot of these organizations make their margins, by upselling you on products, which is basically just giving you additional products on top of your kind of core product. Okay, so let's have a look at this section here. This is the company strategy. Now, really, really interesting information here, really good information to factor inside your answers. I think there's some areas here that you could incorporate into an answer inside your exam. So this is really, really useful, this information. So let's have a quick look here. The company aims to grow the business through both the development of new markets and expansion of its range of services. So that doesn't really give us too much information. So we have to kind of speculate a little bit. Development of new markets could mean moving into a new market altogether. So maybe a new location, perhaps, or it could mean moving into a different business model. And at the very end of the pre-scene, there's two different types of trends, or two different types of models that the organization could move into. One of them is CaaS, Cars as a Service, which we'll talk a little bit more about at a later stage. But basically, Cars as a Service is where customers are moving towards usership instead of ownership of cars, and we charge them for that usership instead of ownership. And then as well, there's connected car technology. Okay, so those are perhaps areas that the business may move into, but we'll talk about those at a later stage. The main objective of the company is to continue to improve margins by utilizing digital technologies. Okay, so again, digital technologies being brought in here. It seems as if the organization is very much digitally focused. Okay, so that's really, really important to note there. 2, improve asset utilization. And just a note here, asset utilization is really, really important for Accelerate, but also real world car rental companies as well. They all use a KPI called the utilization rate, which we will see at a later stage as well, okay? That utilization rate is really, really important for car rental companies. If you think about it, the goal of a car rental company is to make sure that their assets are being used efficiently. So their assets would be the vehicles, and we need to make sure that we don't have vehicles that are just sitting there inside the lots, not being used by customers, because that's going to be, a bit of a waste. Okay. As well, we need to make sure that the cars are being maintained and repaired quickly so we can get them back out in the park where they can be rented by customers. So asset utilization is so important for this industry. As well, improve methods for car disposal using online, direct to consumer and direct to dealer channels. Achieve fleet cost efficiencies through fleet planning initiatives. Control costs. Okay. So you'll see their control costs. I think that's quite important. That interacts with things like the CIMA cost transformation model, which was tested in the last window. Okay, so that is an important theory there from P1. As well, controlling costs, you could maybe bring in variance analysis to a certain degree, so it's important to know from a P1 perspective. But let's just have a look at this a bit more. So control costs and increase efficiencies through process improvements. So, improving processes. Perhaps that means making them more automated. But of course, we have a bit of a balance to strike because we're a premium company. We're a high quality company. So we have to be somewhat customer facing, but also have automation to a certain degree so we can drive cost efficiencies. Because remember, we made a loss in 2020. So how are we going to recover? If demand is going down, the only way we can recover really is by making cost efficiencies. And you can see that being mentioned there, achieve cost efficiencies in the objectives. Perhaps if we're looking to improve our processes, we could use BPR, Business Process Reengineering, which is a part of E1. Okay, so the people in the business, you'll see there's 885 staff, roughly 85% of them are in the sales locations and the maintenance centers, and then head office, 134 people. That's about 15% of the people there in the business at head office. We have the directors here. Okay, so there's a wide range of previous experience, which is always good to have, especially from a corporate governance perspective, and mainly in the car rental industry. So that's great experience to have for this particular company. Okay, so let's have a look at the bios or the profiles of the directors. Okay, so the first one there is for the managing director, Joseph Waller. Now, we know Joseph is the original founder of the organization. He founded it in 2002. And as well, he's the managing director. So what does that mean? That means that Joseph is very likely to be a motivated individual. He started the business, so he's going to want to see it succeed. So that's important to note. But as well, sometimes the issue with having the original owner as the managing director is that they're unwilling to give up control. Okay, so sometimes, an owner being the managing director, they may feel as if they don't want to give up control of the business. So that sometimes could be a drawback of having the original founder as the managing director. Now, interestingly enough, it says that he's keen to continue to expand the business through the exploitation of digital technologies. So that could mean, as we said, that cars as a service, which we'll come back to. Don't worry if you don't understand at this stage. It could mean this car connected technology that we talked about just very briefly. There's lots of different avenues that we could explore here. But basically, the important thing to note is that the company is very much looking to use technology to a greater degree. Okay, so that would suggest to me that we need to know those technology related elements of E1. He wants to ensure as well that an appropriate infrastructure is in place to support future expansion. So the business is not looking to shrink in size, it's looking to expand. Okay, so despite its pretty rough year in 2020, it is looking to expand. Okay, the finance director there, Megan Dubois. So Megan is a CIMA qualified accountant, and she was appointed as finance director last year. She has a reputation for keeping a tight rein on the company's finances, which would suggest to me that the organization is using variance analysis, using budgets. Okay, so that's how we keep a tight rein on the finances. And as well, it would suggest to me that perhaps we may be asked questions on the CGMA cost transformation model, maybe even digital costing. Those areas have come up before in the last round and the round before. So I would suggest that you have a look at those topics from P1. IT director, Gavin Hoffman. Now, I find it quite interesting. They talk here about the fleet management system. So he was pivotal in the development of that system. That system is really important for this company, Accelerate. And we're going to learn about that system in just a few pages time. Okay, so we'll come back to that. But just note that it is an important system for the organization. Marketing director, Jessica Strauss. So Jessica joined the company in 2010 after previously working as a marketing executive for a retailing company. She's keen to exploit social media marketing, which you would expect. But I find it quite interesting here. It's not just to promote the brand, it's also to gain market intelligence. So that could suggest that maybe Jessica is thinking about using big data. Maybe she's thinking about how we could harness social media information that we have to build profiles of customers, which a lot of organizations do. Okay, and that is a part of P1 and E1 big data analysis. As well, we have Jack Durand, who's the retail operations director. And I find it quite interesting. It said in his bio that, like Jessica, he's keen to further expand the company's services. Okay, so he's someone, again, who's interested in expanding the business. So what does that mean for us? Maybe new markets, perhaps maybe this car club membership schemes, which we'll talk about later. This is basically where you rent a car by the hour. Okay, so some of you may be familiar with those types of services in your city. This is something that's going on in the world at the moment. It's a current trend in this industry. And as well, he's looking for new opportunities to meet customer needs. So he's seeking new opportunities, new markets, new models. Okay, so the business, again, is likely to grow in a new avenue. Then we have the human resources director, who is Ben Spiegel. Okay, so Ben has a wealth of experience in human resources, and he believes that the company's employees are its most important asset. And that is likely the case, because if you think about it, as a premium brand, it's important that our staff are respectful, that they're helpful, that they maintain the good reputation that the organization has. It's very difficult to operate a premium brand if your staff are not well trained. They're not very kind to customers. These are all common sense things, but of course, just important to think about in the context of Accelerate. Okay, so let's have a look at this page here. This is an extract from Accelerate's organization chart, and you'll see that this is a functional structure. Okay, so the company is divided up into different functions. We have finance, IT, marketing, retail operations, and human resources as well. Now, what are some of the advantages of having a functional structure? Well, the biggest advantage is that it tends to avoid situations where you have duplicated roles. Okay, so in a divisionalized structure, sometimes you'll have 2 HR managers. You may have multiple finance departments. If you have a functional structure, you tend to just have 1 finance department, 1 marketing department, 1 operations department. Whereas in the divisionalized structure, as we said, those can be duplicated across. So there's typically a cost efficiency element to having a functional structure. It's very common as well. It's what people would expect when they go into a job. But in terms of drawbacks, one of the biggest drawbacks of this particular structure is that it tends to lead to silos. Okay, so this is where people within the organization, they just stick within their own department. They don't move into other departments. They don't really interact with other departments. And as a result, it doesn't encourage collaboration or interdepartmental collaboration, which we would like to have. Okay, so sometimes functional structures, they have a lot of advantages. Sometimes they have disadvantages. It depends on the organization and the people working in them. But of course, we don't really have that information here. Okay, so one thing just to note here in terms of the organization structure that I found quite interesting was that the IT director has 2 direct reports, which would suggest to me that IT must be an important area of the business. If you think about it, the finance director just has 1 direct report, the marketing director has nobody, and the human resources director has nobody. Now, I know the retail operations has 3 people there, but you would expect that. But the IT director has 2. So it would suggest that IT is a very important aspect to this business, which we will learn a little bit more about later. Okay, so let's have a look at the finance department. So this is very, very simple. We have at the very top, Megan Dubois, the finance director. What would she be involved in? Well, more so the strategic elements of the finance department. So capital structure, financial strategy, mergers and acquisitions, for example. And then we have the finance manager, who's Ethan Tennant. Now, it's important to know his name because chances are he's going to be the one sending you the emails inside the OCS exam. Now, not always. Okay, so it won't always be him, but sometimes. And it's just important, again, to know the name. So when you read the email inside your exam, you'll know, okay, it's Ethan Tennant. He's the finance manager. So what would a finance manager be involved in? Well, typically finance managers act as, I suppose, support for the finance director. And as well, they would be involved in overseeing the month-end process, the preparation of month-end accounts, or they would be involved as well in the, I suppose, overseeing of creating the financial statements, so the published financial statements. They may not be directly involved in putting them together, but they would oversee the process. And then we have us, okay? So we are one of 5 finance officers. Not too much to really think about here. This is quite simple, quite straightforward. But just again, remember Ethan Tennant, he is your manager, and then his manager is Megan Dubois, okay? So here we have some information on the company's operations, okay? And the first element is sales. So as we said before, there's some sales locations that are on airport, which means that they're close to airports. And then we have some that are off airport, which means that they're situated in areas away from airports. So for example, train stations or city centers. Now, again, it comes back into the pre-scene. Some of the properties are owned by the company, but many of them are leased. So when we see the financial statements, we should see some information in regards to leases, okay? So remember, IFRS 16 is examined as part of F1, so it's important that you know that standard, just even in terms of interpreting the financial statements. You'll need to know how a lease is accounted for, but as well, if it comes up in the exam, you should be able to give the accounting treatment of a lease that is recorded in the statement of financial position, but also small leases that could perhaps be recorded in the statement of profit and loss. So both types of leases, basically. Okay, so the on-airport sites represent 68% of the company's sales, and the off-airport sites, they represent 32%. Now we have to be careful here, because remember, the organization sold some of these sites, and it said that the majority of them were the off-airport sites. So these statistics here are a little bit skewed, because naturally we have more on-airport sites, so we would expect sales to be generated from these sites because we just have more of them. Okay, now we don't have the breakdown here, but again, I wouldn't really read too much into these statistics. What is interesting, though, is that we have the breakdown of 2020 sales by customer group. So we have 49% business, 51% leisure. So basically half and half. Okay, so that is interesting information there. As well, sales revenue is subject to seasonal variations. Okay, and that is important from a P1 perspective, because we have to think about questions that may come up in regards to time series analysis. So within time series analysis, you have the additive model, the multiplicative model as well, adding in those seasonal variations. And in this case, it will be summer. Okay, so the kind of summer vacation periods, that's going to have an increase in our sales. And then perhaps as a result, we would expect maybe a drop off in sales in winter. Okay, and you can see there, just looking at this pie chart, January, March representing the lowest segment there, and then July, September, 28%, the highest segment. So that kind of somewhat confirms my theory. But just to note, seasonal variations coming in summer. Okay. Now, I find this quite interesting. So the fleet size is adjusted over the course of the year. Okay, and that makes sense because we're trying to manage these seasonal variations. So we change the size of the fleet. It's not a fixed size. But if there's any localized changes in demand, then we move cars to different locations where necessary. So for example, if we have maybe a very, very busy period in Birmingham, in the city of Birmingham, well, maybe we could take some cars from Coventry to maybe cope with that increase in demand. So that's what the business does. It manages these localized demand fluctuations by moving cars to different locations, which again is something to think about in terms of maybe responsibility accounting. So how does that car then get accounted for within the different sales locations? Again, just something to think about in terms of P1. Okay, so here we have some information in regard to the fee again. So the average daily car rental fee, as we know already, it depends on the length of the rental period and the type and the size of the car. Now, what's interesting here is it says that the rental fee per day reduces as the length of the rental period increases. And why is that? That's because there's a cost advantage to longer rental periods. And that's because many of the costs that are incurred, they actually are only really incurred when the rental starts. So, for example, if I rent a car, there's a cleaning cost associated with it. There's also a maintenance cost. But that cost is only incurred when I rent the car, okay? It's not incurred every single day. So that means there's a cost advantage to customers renting for longer periods of time, and we pass those on to our customers. If, for example, I was to rent a car for maybe 5 days, that car is only going to be cleaned once and it's only going to be maintained once. Okay, so there's only that cost being incurred one time. Whereas if I rented a different car over those 5 days, there'd be 5 sets of cleaning costs, 5 sets of maintenance costs, and it's a bit more expensive then for the organization as a result. So we pass on those cost savings to our customers. As well, it's mentioned again, the rental income management system, which we'll see, as it says there, see below, so we'll see that later on. But just note that's an important system, okay? It's fundamental to ensuring that the prices are competitive. Now, the average rental period is 6.3 days, okay, which would seem to me quite standard. Now, we may have customers that just rent for 1 day, and we may have customers that rent for a few weeks. So that statistic, again, we don't know the kind of information behind it. Is that for the entire year? Is that for maybe a few months? We don't know, okay? So it's just something to think about, but I wouldn't read too much into it. And as well, it's important, again, it varies by customer type. So the average period for leisure customers is longer than that for business customers. Now, rental fees are paid in advance, which is good from a cash management perspective. So we've actually obtained the cash first and then we provide the service after, which could actually lead to a negative working cash management cycle. And as well, we offer credit facilities. So credit facilities is important from an F1 perspective, managing credit, managing receivables. So we offer credit facilities to a number of businesses which regularly rent cars for staff and visitors. So that is important to note. The fact that we offer credit means that we have to manage credit. We have to have a credit policy, I would assume. It doesn't say here that they have one, but you would assume that they do have one. And we have to manage that credit in such a way that we don't have customers defaulting. Remember, we're in a global recession. So there's a risk here that customers may go out of business and as a result, they never pay us. So we just have to be conscious of that in terms of cash management, receivables management as well. Now, employees at the sales locations are empowered to resolve most customer issues, which is good, and they receive appropriate training to enable this to happen. Customer satisfaction levels are tracked by sending location-specific surveys. This is really good information to have for this organization because remember, it's a high-quality, premium organization. So customer satisfaction is important. It's important that customers are getting a good level of service from us because that increases our reputation and that helps to justify the higher price point as well. Okay, so let's go to the next section here, which is on maintenance. Now, maintenance may seem like a very trivial element of this business, but it's actually really important. And why is that? Well, first and foremost, a good maintenance cycle, a good maintenance process, it is fundamental to customer safety, which is, of course, the utmost importance for all car rental organizations, whether they're premium or not. Okay, so that's the most basic requirement, I suppose, for an organization like this is that they are able to keep customers safe. As well, it increases customer satisfaction. So if we have a car that's in proper working order, we have a car with no issues at all during the entire rental process, that's going to lead to a positive customer experience. As well, and this is really important, one that we wouldn't perhaps immediately think about in terms of maintenance. Quick and proper repairs are critical to ensuring that fleet utilization rates are kept high as possible. Now, remember I said that the utilization rate is a very important KPI for this industry, both in the real world and in this case. Okay, so if we want to increase that utilization rate, what do we do? Well, one thing that we can do is we can have a very quick repair process, a very efficient maintenance process. Of course, we don't want to make it too quick in such a way that we're not repairing the cars properly. We don't want that to happen, but we want to make it as efficient as possible that, we're basically getting those cars repaired in the quickest possible time whilst maintaining a high standard. So that should help with our utilization rates. We're getting the cars out of the maintenance centers back into the sales locations where they can be rented by customers and generate revenue for us. As well, the maintenance centers hold some inventory. So if you see inventory inside the statement of financial position, it's likely related to the maintenance centers. They're holding inventory of consumables and spare parts. Now, there's 4 main occasions when the car is checked by the mechanics. The first is this initial check. And this is when the car is first delivered by the dealer. It seems as if just by looking at the paragraph there that this is a fairly standard check. They're just looking to see, is everything okay? And this is almost due diligence. This is just saying, is the car in the correct working condition? Is everything okay with it? Before we kind of pay the dealer, is everything all right with the car? This makes sense. Okay, it's kind of a due diligence process. Then we have checks that are carried out when the car is returned by the customer after rental. So you would expect this. Now, what I find quite interesting here is that the paragraph says, if a car comes back from a rental with a defect noted, the car is given a quality control inspection before the defect is repaired. And this quality control inspection is more thorough than the initial inspection. So this could actually be quite a costly process. Think about things like ABC, cost drivers. Okay, so for this particular area, the maintenance centers, this would be a cost driver, okay, this thorough inspection that we do. And it says there it includes things like steering, mechanical items, check the tires, including spare tires as well. Okay, so this is quite a thorough analysis. Again, it could create significant costs, but it is important to do. Okay, and just remember the maintenance center. I think this would be a really interesting area to be examined from the perspective of zero-based budgeting. Okay, so this seems to be all costs to a certain extent. So maybe activity-based budgeting or zero-based budgeting could be tested in regards to this maintenance center or a series of maintenance centers. Then we have the regular servicing check, which we would expect it's carried out in line with manufacturers' recommendations under warranty requirements. So this is really important, very standard as well. And an interesting note there as well is that the company's maintenance centers, they've been approved by the main car manufacturers to carry out rectification work under warranty. So that really means that if they carry out some rectification work, so we'd expect maybe some minor work, it's not going to void the warranty. Accident repairs, they're carried out by third-party suppliers, and the car is checked once these suppliers complete the body repairs. Okay, so it's checked by Accelerate. They do a bit of an inspection before payment is made, and that's a prudent thing to do. We're checking to see, is everything okay, making sure that the supplier has done it correctly, and that's good from a cash management perspective as well. So we're not paying out cash and then perhaps we spot at a later stage that the supplier made a mistake, and then it's very messy to get them to go back and do it again. So it's good. This is a very clever thing that Accelerate are doing. Okay. So as I said here, in terms of the maintenance center, it's really, really important. It's actually fundamental to Accelerate's business model. It may seem like a small aspect of the business, but it's quite an important area. And I think, just speculation here, but I think an area that could be tested is zero-based budgeting, activity-based costing perhaps, or maybe even activity-based budgeting. Okay. So let's have a look at this next section here, the fleet management system and the fleet purchases and disposals. Okay. So we said the fleet management system is an important system. That's all we know about it at this stage. So what does the fleet management system actually do? Well, I think there's quite a comprehensive summary here that I'm going to read out in just a few seconds. But just to give you a basic overview, the fleet management system essentially, I suppose, the kind of main thing that it does is it facilitates the operations of Accelerate. That's probably the most basic overview of this system. It's a very, very comprehensive system. It does a lot of different things, but essentially it facilitates their operations. Okay, so it allows the company to operate in such a way that it does. And it is such a crucial system for this organization. We're going to find out why. So the company uses a range of technologies, and that's important to note. As we said, the company is very much digitally focused, and that's great. Okay. But I just want to kind of hone in here, all of which are linked to its fleet management system. So again, just showing how important this system is. We use a range of technologies, but they're all linked to this system. So what is the fleet management system? Let's look at the comprehensive description. It's a national reservation, rental, fleet control, data processing, and information management system. So again, it facilitates the operations of the business, and we'll read a little bit more about that. So it allows thousands of customer inquiries to be processed each day. Now, that's a great thing to have, of course. That's really, really important. But when I read that, I think about the volumes of data that we're getting from customers. If we're processing thousands of inquiries a day, that would suggest to me that perhaps big data analysis could be used. Maybe business intelligence as well. So again, coming to E1, to a certain degree, P1 as well, big data analysis is on the P1 syllabus, that could be tested. Okay, how could we harness this data to create insights for the business? Okay, so let's get back to the fleet management system. So it provides customers with accurate and timely information about the company's locations, rental rates, car availability, as well as enabling customers to place or modify reservations. So again, all of the basic components of the business that you would expect, this system is facilitating it. Now, the company also uses data supplied from the fleet management system and other information management systems to maintain centralized control of major business processes such as pricing, fleet acquisition, and logistics. So what this suggests to me is that the business is using a data-driven approach to decision-making. Okay, so you can see there pricing, fleet acquisition, and logistics. We're not just leaving these things up to individual managers. We're taking a data-driven approach, a scientific approach to these decisions. Okay, and I think pricing is probably one of the most important ones, as we will see when we go through this pre-seen document. Okay, so the fleet management system incorporates two main components. The first is the fleet planning model, and that's a comprehensive decision tool which enables the company to develop plans for the acquisition and disposal of its fleet. So basically, this particular model, it's for helping us to create an optimal mix in our fleet. Now, remember, the fleet is the kind of group of vehicles that we have as Accelerate. And so when I talk about mix, I mean, the right types of cars, the right size of cars, the right age, okay? Cars that are, I suppose, subject to repurchase agreements, cars that aren't, okay? So that would be the mix. We need to have an optimal mix. So the fleet planning model, it has details on the fleet age, mix, mileage, and cost reports as well. So cost reports is important. Remember, the business is looking to manage its costs, and that's the way it's going to recover from that loss, I would imagine. And we'll read a little bit more about that later. But really important that this information system is able to generate cost reports, gives us more data to work with. Again, think about ABC, activity-based costing. We need data to actually implement ABC. And as well, this allows us to monitor and change fleet deployment and optimize fleet plans based on estimated business levels and available repurchase programs. So again, we're taking a data-driven approach to our fleet mix, okay? So the mix of different cars that we have within our fleet. Then we have the rental income management system, and this is more so around controlling car availability, the movements of the cars, and pricing. Now, pricing is so important in this industry because, the seasonal variations, there's competitors that we have. Remember, we saw global competitors that are, going to have an effect, I suppose, on our pricing. And as well, we have lots of demand issues. We have localized demand changes. We could have weather impacts. Doesn't say it there, but that could be something as well. So pricing is really important. We need to make sure that the pricing is in such a way that it's going to ensure sales and it's going to maximize margins. Now, the system monitors forecasts of car supply and customer demand. Okay, so it takes into consideration customer demand to support the company's strategy to optimize utilization rates. Now, remember, I said this was a very important KPI for the car rental industry outside in the real world and also inside the pre-scene as well. So this is a really important system for the organization because it optimizes utilization rates. And how does it do that? Well, it manages the car movements, the availability, and the pricing. Now, as well, this system also takes into consideration competitive industry rental rates. And that's important because it's scanning, the external environment, and it's incorporating that into our system. So that's really, really important. And remember, E1, different sources of information, is a part of the syllabus. So this is, I suppose, an external source of information that's being input into our system. And it's really going to help us when we're determining prices. We're taking, again, a data-driven approach to pricing. Okay, so the fleet purchases and disposal. This is really interesting, and this is very, very unique to this particular industry. So in 2020, 45% of the company's car rental fleet was comprised of cars subject to agreements requiring car manufacturers to repurchase the cars at a specified price. Okay, and these cars are called program cars. So we talked a little bit about this before, but basically, the program cars are cars that the manufacturer has agreed to repurchase at a specified price under certain conditions. Okay, so the car has to be, within a kind of certain condition level, mileage restrictions as well as a part of that. But basically, they guarantee at a certain time, they will repurchase that car for a guaranteed price. Now, why is that a good thing for the business? Well, if we have a guaranteed price, that takes the risk of the residual value away from Accelerate. So basically, if you think about it, the organization is going to sell the car at the end of its useful life. And we know what the price is at the end of the useful life. So there's no risk there. Okay, we know that we're going to get a certain price for the car. So it's good for planning. It's good for cash flow because we know at the end of the useful life the price that we're going to receive. But what about the other cars, the cars that we've purchased outright? They're the other 55%, and they're called risk cars. And why are they called risk cars? Because Accelerate, the organization, they have residual value risk, which means at the end of the useful life of the cars, we don't know what value we're going to get for them. We're somewhat at the mercy of the second-hand car market, okay? So that creates risk, okay? We don't know what we're going to get for those cars at the end of their useful life, okay? Now, important to note that the program cars, the ones that have that repurchase agreement, they are more expensive, Okay, and the reason for that, I would assume, is because we're getting this guaranteed price. Okay, so just important to note there, I know we kind of talked about multiple different paragraphs in this sheet, but basically one of the really important things, and again, it's kind of buried in here, is that the fleet purchases are financed using different types of borrowing from major financial institutions, okay? Now, that to me suggests that we should understand short-term debt, okay? So in this particular case, the organization is using debt to purchase the vehicles. We don't have to know too much about this, but basically we're going to financial institutions, we're getting debt, and we're using that debt to purchase the vehicles. Okay, so just think about that in terms of the risks that perhaps that presents. And, you know, it's very much short-term debt because the cars typically are held for about 12 months or less than 12 months. As well, none of the fleet is leased. So if we see any entries in the financial statements for leases, well, none of it's going to be related to the fleet, okay? So at present, now that doesn't mean that, you know, in the future, they can't look to maybe lease vehicles, and we would have to understand the financial implications of that. What are the accounting transactions that would have to take place if we were to lease cars? Okay, so you should know that IFRS 16, that's in F1. So if you don't know that, I recommend you have a look at that particular area. Okay, so as well, we have some information here in regards to the way in which the cars are disposed of. And remember, these are the risk cars, because the other cars, the program cars, we have a guaranteed price for them, so we don't have to go and sell them in the open market. Okay, so these are just the risk cars. They're disposed of through car auctions and direct-to-dealer sales. Now, in 2020, the organization expanded the scope of its direct-to-consumer sales, car sales program, to include the sale of risk cars directly to consumers through company-owned second-hand car retail sites in several Everland cities. So what we're trying to do here as an organization is we're expanding the opportunity of selling the cars direct to consumers. And if we sell direct to consumers, it's going to be better, I would imagine, for our margins. Okay, we're going to get a better price because we're cutting out the middle party. As well, it also says direct consumer sales and alternative disposal channels such as online auctions provide the opportunity to maximize car sales prices. So we're cutting down on the intermediaries. We're selling direct to consumers. And online auctions, I think that's quite interesting. You know, we're able to use these online auctions to sell directly to consumers. And if we're selling directly to consumers, as I said, it should, in theory anyway, deliver a better price because we're cutting out an intermediary. So that's an important piece because it links to one of the objectives of the organization, which was to kind of improve the fleet disposal process, okay? As well, IAS 16, you should be conscious of how a car or even a building or equipment, any asset in general, is disposed of and how that would be accounted for. Okay, so here we have some information in regards to marketing. Okay, so marketing is the responsibility of the marketing department. That makes sense. They use traditional marketing media, so TV, magazines, and as well they use social media marketing, which you should remember from Jessica Strauss's profile. She says she wants to get some intelligence as well as improving the brand, accelerate brand. Now, as well, the main activities of this department: market research, promoting, advertising the Accelerate brand, raising brand awareness, and helping to determine pricing strategies as well. So they have quite a wide range of activities in this department. Marketing is a factor of E1, understanding, the marketing mix. Okay, so this is quite important for this organization and important to understand the different KPIs that interact with sales and marketing as well, which is, again, another part of E1. The company's website and app, they're considered to be important marketing tools and they represent the main sales channel. And that's really interesting because having an app and having a website, it allows us to get data on our customers, essentially, which really helps us understand the behavior of customers, which is a very, very current topic, okay? Not only in the syllabus, okay, so E1, and to some extent P1 as well, but also in the real world. So organizations are constantly checking their analysis, all of the data analytics that they have for their websites and apps, and this is giving them a profile of customers. It's helping them to understand customer behavior. And, the kind of ultimate aim of that is to optimize profits. increase sales. Okay, so how can we tailor our website to better serve our customers? And that should then hopefully lead to an increase in sales and therefore profits. So as well, the website and the app, they're continually developed, and it says to create engaging content. So it's an important aspect of the business as well. They're in all major European languages. Hopefully that's extended to even more languages, so we can take into consideration tourists that may be outside of Europe. And the website and the app pages, they're informative, clear, and easily navigated, which is great. That's what you would expect from an organization that's taking their website and their app seriously. Now, the website and the app employ data analytics. So we talked a little bit about data analytics. So it looks as if the organization is doing this already to enable the company to source sales data, which is important, but also to understand metrics like the number of visits, average time on the page, and bounce rate, which is basically the rate of customers or rate of users that just go on the website and then they leave the website without viewing another page. Okay, it's a very, very standard KPI or metric for websites or online businesses. Okay, so there's 3 different KPIs that the organization is analyzing at the moment. Remember, KPIs is quite a large part of E1. Okay, so there's three KPIs that the organization is using, and as well from our previous analysis of the pre-seen document, we know the utilization rate is also an important KPI. So we have 4 KPIs we know straight away that the organization is analyzing. As well, data analytics captures data about the customer. Okay, so information here: customers, home address, age, reasons for the car rental. Okay, and all of this information is really, really important. Remember, big data analysis. We should be able to take all of this data and build up a profile of our customers, and it should help us as well with things like forecasting, predicting customer behavior. Really, really, really good data to have. Data analysis and data analytics is an important source of information for this company because it helps them to determine customer preferences and the sales potential of the company's products. So really, really good info to have here. Looks as if the company, to a certain extent, is already analyzing this data. As well, there's some information here in regards to these surveys. So in addition to the data that's collected from the website and the app, we have another source of data as well, which is an email that's sent to customers at the end of the rental period, and it's a survey. Okay, so there's a survey here about the rental experience. Really, really good information. The only thing I would suggest here is that the pre-seen doesn't really allude to what becomes of this information. So is this information analyzed? Is it viewed? Is it used for KPIs? We don't really know. Okay, so again, it's kind of open-ended. Now, IT. So, the first sentence there, something that we probably already know at this stage. So the company makes extensive use of digital technology. So again, digital technology coming back into the pre-seen. This is a really important aspect to Accelerate's business model. Okay, so digital technology, it's been mentioned several times, and as well, the kind of directors' profiles hinted that many of the directors want to use more digital technology in the future. Now, the company has an Accelerate mobile app. Now, mobile apps have come into the exams now several times, particularly around digital costing. So understanding the different costs that would be incurred for not only developing an app, but also, I suppose, operating an app over time. So your subscription fees, maybe any annual fee that you pay for perhaps the kind of source code or whatever. So there's lots of different aspects that interact here with mobile phone apps. It's come up quite often actually in the OCS papers. So just important to note this mobile app. Think about the different costs that may be involved in putting this app together, how those differ from the standard costs that the organization would incur, and how it might be difficult for the organization to get a per unit cost of an app. That's come up in the last sitting and the sitting prior, okay, as well in the prototype paper. So it's come up maybe 3 times. So this app is really comprehensive. It allows customers to reserve, update, cancel reservations, choose their car, exchange, upgrade their car, add ancillary products, extend rentals, return the car with 1 click, confirm their fuel level at the beginning, and enter the rental using their mobile device. So it's a really, really comprehensive mobile app. Okay, and that's very, very strong. That's a selling point for the organization. Again, it's a great tool for collecting data and understanding customer behavior. As well, this rental income management system we talked about, that includes pricing analytics, and we know that already, which is helping us to increase our profits that we're earning each day. As well, the company plans to continue developing or deploying new technology systems to support management systems or management decisions, which is, of course, what we would expect just based on the directors' profiles and also the company strategy and objectives. We saw that technology is going to be a key part in recovering our cost base, okay? So driving cost efficiencies to hopefully reverse that loss and make sure we have a profit then in 2021. Now, the finance department here, I think this is quite interesting. So very standard information initially. So the financial information system produces monthly management accounts and annual financial statements. So we would expect that. But what I think is quite important here is that budgets are produced on an annual basis. Okay, so it looks as if the organization is not using rolling budgeting or beyond budgeting. Now, that's interesting because if you think about the I suppose the external environment in which the business is operating at the moment, there's a recession going on. There's been a drastic change in demand. Okay, so 25% drop in sales revenue between 2020 and 2019. You know, it's a kind of an unstable set of circumstances that Accelerate are operating within. And as well, the organization is looking to move into perhaps new business models, new locations, new markets. So that creates even more uncertainty for the business as it recovers from that very tough year in 2020. So perhaps rolling budgets would actually be appropriate because rolling budgeting is very effective where we have uncertain external circumstances that are affecting the business. As well, beyond budgeting incorporates rolling budgets. So that's also useful for an organization like this. So you could have, perhaps, again, just speculating, could have a question about introducing rolling budgets, introducing beyond budgeting. So you should be well prepared for those questions. Daily rental fees as well and operating costs are reviewed as part of the budgeting process. So again, we would expect that. And other information to formulate the budgets is obtained from the fleet management system. Okay, so we're using a data-driven approach again to putting the budget together, which is great. Okay, and it just shows again how important that fleet management system is. As well, individual functional managers have responsibility for setting and achieving budgets. That would appear to me that this is a participative approach to budgeting. Okay, so individual functional managers are responsible for setting budgets. Now, what's an advantage of that? Well, one of the biggest advantages is that you're getting the experts to put budgets together. So hopefully the budgets should be accurate as a result, because we're getting the people who are doing these jobs. They're in this department every single day. They should be an expert on their area. So we're getting these guys to do their budgets, and that should lead to more accurate budgets as a result. However, there are some drawbacks. One of the biggest drawbacks of this is that it can lead to slack. Okay, so slack is something that we don't want inside our budgets. It's extra padding. Okay, and you'll know if you've ever put a budget together, it's very tempting sometimes to put in slack. We don't want to have that inside our budget. So taking a more centralized approach, very often it leads to less slack being built into the budgets. So there are pros and cons associated with the participative approach. Generally speaking, though, it does lead to more motivation and it does lead to budgets being more accurate. Monthly reporting as well is done on actual performance compared to a budget. So that would suggest to me that there's a degree of variance analysis going on. So you should be well prepared for a variety of variance analysis questions. So sales variances, your cost variances, so labor, for example, maybe it's the maintenance center, maybe it's a sales location. Okay, so you just should be really, really well prepared for those variance analysis questions. It's a very big part of P1. So chances are there will be at least one variant that has a variance analysis question on it. Again, no guarantees, but it's just good to be prepared for those types of questions. Okay, so let's have a look at human resources. You'll see here it's on a separate page. So the company believes that its employees are fundamental to its success, which is good. Okay, and I would agree. In a premium, high quality offering like this, it is important that we have well-trained employees and that they are useful, that they're helpful with customers, that they're able to assist them with their queries, and of course that they're courteous, okay, so they leave the right impression with customers. As well, Accelerate are committed to maintaining a professional and supportive workplace, which is something that we would expect. It seeks to support the well-being and growth of its employees by offering development opportunities and training. So that is a part of the HR function. Remember, from E1, selection, performance, appraisal, rewards, training and development. Those are all areas that would be covered by human resources. Okay, so this is standard stuff from a human resources department. Now, the company operates an apprenticeship program for its maintenance technicians. Now, that is a good thing for the organization to do, and it makes sense. Okay, so they're training people up, to be the managers of tomorrow. But I suppose something just to think of from the perspective of P1 is if you have labor variances, for example, for the maintenance department, think about the impact of having apprentices. So that might, if we had a larger amount of apprentices versus what we would have expected, that could lead to a decrease in the average labor rate for the maintenance department, because very often apprentices are paid quite a low wage, and then over time they build it up. As well, if you're new to a job, if you're an apprentice, you're not going to be as quick as someone who has perhaps done the year for 5, 10, or done the job rather, for 5 or 10, 15 years. Okay, so that might have an impact on our labor efficiency variances. Okay, so if we had maybe more apprentices than we had initially expected, that could affect those variances. So again, just little things to think of as we go through this pre-scene. How could this be tested? How does it interact with E1, P1, and F1? As well, there's a customer service training program, which is important for customer-facing staff, and it helps them to continually improve the overall customer experience. So again, being stressed, customer experience, so important for this organization. Okay, so let's have a look at this section here. I find that this section is actually quite interesting information. It's an industry analysis, okay? So the first line there is quite an interesting summary of the European car rental industry. It says that the industry is fragmented, with approximately 65% of the market share being held by 5 major companies. And these major companies operate in company-owned or franchise locations throughout the world. So that suggests that there's basically 5 major players and they dominate the market to a certain extent. 65% is quite a lot just for 5 companies. Now, we know to a certain extent, again, it's not said explicitly, but it's certainly hinted that Accelerate is a national provider. So we're not one of these 5 companies. So it makes sense then when we went to the overall summary of Accelerate and it said in the beginning that the organization had problems with competing against these global players. Well, it makes sense that we had issues competing against them because they are so dominant in the marketplace. So that's just something to note, okay? The organization Accelerate, it's not necessarily an international brand, okay? So it's competing against these types of companies that may have cost advantages through economies of scale, or maybe they're operating franchise locations, so they're able to expand easily into different locations that may be difficult for an organization like Accelerate to, because they may have to raise capital, for example. Okay, so the major companies operate in the market under multiple brands aimed at different target market segments. And we'll see why that's important when we go through the 3 different brands that are in the market, okay? Now, remember what we said earlier was that Accelerate just operates under the Accelerate brand. So we don't have multiple brands at the moment. Now, we may in the future. So there's nothing to say that perhaps Accelerate moves into a different brand. So maybe we have multiple brands, but at the moment we just have the Accelerate brand. So there's 3 different types of brands on the market. So we have the premium brand. Now, this is more than likely where Accelerate sits, okay? So maybe premium or the mid-premium brand. These brands provide high quality car rental services, okay? So they're at a price point generally above the value branded car rental companies, and they serve the premium business and leisure segments of the travel industry. So this is the kind of elite tier, okay? This is the best of the best, the high quality offering. And they tend to offer additional services, more so than the lower price brands, and their range of cars will be more extensive, particularly at the prestige end. Remember, prestige is just another word for the more luxury end, okay? So the prestige cars would be, the more luxurious cars that we would have on offer. Then we have the middle segment. So the middle segment is also known as the value brands. And these are, for the more value conscious customer. Now, that doesn't mean that the customer is looking for just a bargain. Okay, it just means that they're value conscious. They want to get a good offer, a good deal. So the prices are lower than the premium brand, but the level of service or the level of customer service is pretty much the same as the premium brand. So they're getting quite a good deal. Okay, so they're getting a lower price, but the level of customer service is somewhat the same as the premium brand. So what's the catch? Well, there's fewer options in terms of the types of cars and ancillary services offered. Okay, so the middle segment, basically it's for people who are value conscious. Okay, they may be a little bit more price sensitive than the premium brand customers, but they get somewhat the same customer satisfaction levels. Okay, so the service is somewhat the same. Then we have the low cost or the deep value brands. Now, these are aimed at the value conscious customers. So these customers are looking for a bit of a bargain. Okay, so the prices are lower than those at the value brand, and the services on offer at a basic level as well. Okay, so these are the kind of cheap cars, people looking for a good deal essentially. And as a result of being a kind of a low cost brand, they have to require customers to pay a high deposit to guarantee against damage to the car. Okay, and that would make sense. And that is often the case in the real world as well. Now, this is really, really interesting here, and it's kind of buried in. But you'll see here that the business model used by these brands, it allows companies with multiple brands to extend the life cycle of a portion of their fleet as they cascade cars through the different brands. So what this means is some organizations that have multiple brands, what they can do is they can take a car from one brand and move it down to the low cost brand once that car has been used for a while. Okay, so say for example, Accelerate, they have some premium brand cars, okay, some cars that are more so at the premium end of the market. Well, maybe after 6 months, 12 months, the car is, it's not as new as it was. Maybe it's not looking as amazing as it was in the beginning. And as a result, it's hard to justify a high price for it. So what we're saying here is that you can take that car and bring it down to the low value brand. Okay, so we can extend the life cycle of that car. Instead of selling it back to the manufacturer or maybe selling it on the open marketplace, we can use that car for another brand, a lower value brand. So we can use the same car, but just target it towards different customers. Okay, so that allows us to extend the life cycle of the cars. And it's something that Accelerate could do. So if they were looking to open maybe a new brand or create a new brand that's focused around price, they could take some of their existing cars that are perhaps not as new as they previously were. Maybe it's more difficult to pass them off as premium brand cars, and then use them in that lower cost brand. The industry as well, and I think this is a really interesting piece of information here. It shows the impact of the global economic recession. So the industry had a severe setback as a result of the global economic recession. So watch this. Prior to 2020, market experts were saying that there was going to be growth in sales revenue of 7.5% over the next 5 years. However, now it's predicted that the industry will not return to 2019 levels until 2025, and some car rental companies will not survive. So the global economic recession has had a massive detrimental effect on this industry. You can see there, some car rental companies will not survive. So really has had a significant impact on this industry. And we saw that actually in just the kind of very beginning of the analysis. We saw that the company Accelerate, they had a profit in 2019 and it went all the way down to a loss because of this global economic recession. So we're feeling the effects of that as Accelerate. Now, there's some information here, and I think this is, again, really prevalent for Accelerate. So I would be thinking about Accelerate when we're going through these different trends. So the car rental sector has gone through some significant changes as a result of the internet and e-commerce. So this is pretty much the case for nearly every industry in the world. So the internet has really changed things. It's called a disruptive technology for a reason, because it has completely changed industries. And the car rental industry is no different. So the first is around online brokers, travel agents, intermediaries. They have grown in importance as a distribution channel. Okay, so we're all familiar with price comparison websites, travel intermediaries. If you're maybe doing a scan of the different flights that are available on the internet, maybe you've used those websites before. These are what we call intermediaries. So they're websites that act as an agent to a certain extent. And these have become more and more popular, both in the pre-scene and also in the real world. These websites that compare different offers, they've become really popular for traveling, for car rentals, hotels, insurance. Price comparison websites have really become a very important part of this particular industry, the leisure travel car rental industry. And you see there that they serve as an intermediary between the client and the operator, and they're a highly competitive segment. So if you think about price comparison websites, there's no major difference between them. So one price comparison website, it's very often the case that it's not much different to the next one. So the two big, players in the marketplace, there's very little difference between them. So it's a highly competitive segment. So what's the big differential between the two? Well, it's prices. Okay, so whenever one delivers the lowest price or the best price, it's going to be the one that people will use. So what has this done? The growth of brokers, the growth of intermediaries. Well, what it's done is it's created lower margins, I suppose, to a certain extent. We'll see that as we go through the next trend. It's put pressure on prices because customers now are able to see more information about prices, which naturally creates pressure on prices because every competitor is just there. It's on offer. You can see what price is the best out of the different competitors, but as well, they act as an intermediary. So they take a little bit of commission. And as a result, then that puts pressure on prices because we have to make a decision as a company. Do we increase our prices to take that commission into consideration, or do we just take it out of our profits? Okay, so the next trend here, and it kind of feeds in somewhat to the one above, but it's the growth of the value segment. So remember, we said the value segment, people who are looking for a bit of a deal, particularly in major tourist markets. So could be in Southern Europe. So Southern Europe might be Greece, could be Spain, Italy. So the kind of hot climate countries. Online brokers have facilitated this change by allowing small players with a limited local physical presence to reach a global clientele. So that's quite important. These online brokers that we talked about, they have helped the smaller organizations reach a global marketplace. And that, as a result, has put prices under significant pressure. You can see they're written. And I think that's so important because if you think about the backdrop of this company, Accelerate, or even just the industry in general, we're in a global economic recession. So prices are already under pressure. Okay, people have less purchasing power, they have less money in their bank accounts. So prices are under pressure. But the growth of the online brokers as well is creating more pressure on prices. So that would suggest to me that that's going to perhaps cause issues for Accelerate. So that may cause them to, for example, move into different models, move into different locations, maybe create a new brand and cascade cars from their existing brand into that kind of price sensitive brand, okay, whether that's a value brand or a deep value brand. Okay, the last one here is quite interesting as well. So car rental companies, they've taken advantage of the opportunities provided by technological innovations to simplify the customer experience. So this is really using technology to make it easier for customers to book, I suppose, in our case here. So that would include things like self-service kiosk, online check-in, automatic rental pickups, all of which makes the rental process quicker and smoother. Now, as well, if you think about it, if we're ensuring that customers use our website, app, that gives us some useful data to analyze, which is, again, an asset for this organization. It helps to build up a profile of the customer. So not only does it make it easier for customers to check in, which facilitates a better experience for the customer, which is important for a premium brand, but as well, it gives us data, gives us information, which is really, really important. Now, again, it's kind of buried in here, but this is some really useful information. There's two different customer groups that we talked about, the business customer and then the leisure customer, okay? Now, both of these customer groups are serviced by Accelerate. So remember, it's basically 50-50 across the two different customer groups. So 50% business, 50% leisure. Now, I know it was 49-51, but basically 50-50. Now, what's important about business customers is that they're frequent renters. They appreciate things like automatic rental pickups, loyalty points, and a global network, okay? So they're willing to pay for this. Whereas leisure customers, they're a little bit different, okay? So leisure customers don't really care as much about these things. They're more price-driven, which would make sense. So if you're a tourist, for example, you go on holidays maybe once, twice, 3 times a year, you don't really care if there's a global network because chances are you're just renting the car for a week, 2 weeks, 3 weeks, and then you go back home and that's it. Whereas if you're someone who is frequently flying, maybe you're going to different countries, you're doing sales presentations, it's important that you have that global network, firstly to get discounts, also because you can rely on their service. And as well, you have these loyalty points. So often with loyalty points, it gives corporate customers discounts, gifts. Sometimes it gives them things like tickets to football matches, tickets to rugby matches. So you'll often see that in the real world where these companies, they build up these loyalty point systems. Sometimes you have air mile systems as well, and they can cash them in for discounts or gifts or presents or something like that. So business customers appreciate these different things, whereas leisure customers don't really care. They're more price driven. Okay, so they're unwilling to pay for these new services because their perceived value added is negligible. Okay, so over the last few years, and this is important, there's been a number of new services, including car sharing services, car club membership schemes, and car subscription services. So these are kind of new developments, and we talked a little bit about these already. And there is actually a page towards the end of the pre-scene that goes into detail about these. But these are kind of new services that have come into the market. And remember, Accelerate's an organization looking to expand, looking to get into new business models, looking to get into new markets. So these could be areas that the organization may move into. So car sharing is, it's things like Uber. Okay, so basically someone has an app, they can be a taxi driver tomorrow. So that's car sharing to a certain extent. Car club membership schemes, these are where basically you rent a car by the hour within a city location. You pick up the car, you rent it by the hour, and then you just drop it off at a convenient location. Perhaps where you live, there is a service like this. There's one, if you want to have a look at it, there's one called Car to Go, Share Now. There's one as well called gocar.ie. It's in Dublin. Very, very interesting just to have a look at these outside of the pre-scene analysis. Basically, you just rent a car by the hour, use your app to get into the car. You open it up, and then you just drive the car around for however long you want. And then you park the car, you close it, and then it's charged to your credit card or your debit card. And then you have car subscription services. So this is where you basically rent a car like you would a Netflix subscription. So you just pay a monthly fee and you have access to a car. And Volvo actually offer this at the moment. So you can just rent one of their new cars on a month-to-month basis. I think it's 3 months notice you have to give them if you want to cancel your contract. So it's very, very flexible. And you can actually upgrade your car, like your phone almost. You can upgrade your car on that subscription model as well. And they maintain the car as well, which is very handy. So the next few years is likely to see the industry focus on two main themes. And we talked a little bit about this already, but there's a bit more information here. And then there's a lot more information on these two areas towards the end of the pre-scene. You can see it even flags there on page 29 and page 30. So there's an increase in demand for more mobility and flexibility. And two major areas here, cars as a service, CAAS, okay? So cars as a service, this is a kind of a new business model. Maybe you've heard of software as a service, SaaS, okay? So this is, again, a kind of new word that people are using. And basically software as a service is where you rent software rather than owning software outright. What you tend to see with software as a service is that you're able to use it on a subscription fee. Very often it's on a cloud server. Cars as a service is where you're paying for the usership. So the paying for the use of a car rather than owning it. And that can be done through car sharing services, car club schemes, car club membership schemes, and car subscription services. So we'll talk a little bit more about that when we get to page 29. But that's basically an overview of CAAS, okay? Then we have connected technology. So this allows companies basically to have two-way communications with cars. So it facilitates the transfer of data between cars and Accelerate in this case, or the company, whatever the company is. Now, lots of brands are using this technology already. Okay, so for example, Tesla in their Model X and their Model 3 cars, they have this connected technology. Lots of new cars that are coming out have it. And basically what it's doing is it's integrating Internet of Things, which is internet connectivity in devices or objects into cars. So it basically makes the car connectable, I suppose, to the internet. So we can have a two-way communication with the car and Accelerate. So What are the benefits of this? Again, we go into greater detail on this towards the end of the pre-scene on page 30, but it facilitates asset management, okay? And having this data, so it's giving us data on things like the mileage, the temperature, the health of the car, the tire pressure, all of these different things. It helps us to minimize the likelihood of car mechanical failure, which is really important because remember, the objective of the organization is to make sure that cars are inside those sales locations ready for customers to rent. Okay, so asset utilization is really important. So technology like this, again, using data-driven approach, which the organization does to a certain extent, it should help us improve our asset utilization rates, okay, which is a fundamental part of the business. So connected car technology also offers the potential for new business models and will provide significant marketing opportunities for the industry. Again, something that we'll come back to when we review connected technology towards page 30. Okay, so the next area that we're going to look at here is in relation to the kind of car rental process, I suppose. This comes from the accelerate.com website, so it's from their perspective. And what we're learning here is how do we actually obtain a car from Accelerate? So we're learning about the business processes. So again, just be thinking about how could we automate certain elements of this process? How could we drive cost efficiencies? Why is this process being carried out? So this all relates back to business process reengineering. Now as well, remember that it's a delicate balance because we could automate a lot more of this, but we are a premium brand. So we do have to offer some degree of customer service. Remember, customer service is important. We have to be somewhat of a customer-facing organization. But there are elements of this process that you may look at and go, this could be done by technology. This may, be a little bit outdated, okay? So let's have a look at this. So first of all, you have to find the sales counter. So this is quite straightforward. If you're picking up the car from an airport or railway station, it may be in the terminal. So if you've ever flown into an airport and you've seen the kind of car rental kiosks, okay, so that's what they're talking about here. Or it may be in a nearby car rental center. So with some sales locations, and this is actually the case in the real world as well, you may have to get a free shuttle bus or transfer to the car rental center. So there's an extra step there. Sometimes you have to get a bus all the way to the car rental center. So once you get there, what do you have to do? Well, you have to show your car rental voucher or your rental reservation number. And this is if you've booked online. Okay, so if you've booked online, you're going to skip a step. You have this number. If you haven't booked online, then you have to complete a reservation form. So you can see there, if you don't book online, there's an extra step, there's an extra cost. Okay, so just be thinking about that. Over time, you would expect maybe 10, 20, 30 years. The process of filling out a form inside the airport itself will probably be gone. Okay, so the way technology is going now, in the long run, you would expect that this would be phased out. Okay, so more and more customers will be booking online to the point where it's just not economical to have staff inside the airport doing this particular task. Now, they may be doing other things. Okay, so that's the important aspect of Accelerate. We may still have staff there to help with customer queries, but things like reservations, they should probably be all done online. It's easier for the company because they guarantee that that car is going to be there for the customer. And as well, they're taking a data-driven approach. Again, collecting data on customers, really, really important. Okay, so in either case, so regardless of whether you booked online or whether you did it in person, you will need your driving license, your proof of ID, and a credit card in the main driver's name. Now, that's sensitive data. So again, just be conscious of data privacy. E1, again, you don't have to have a very comprehensive level of knowledge on this, but just be conscious. It's sensitive data. So it should be stored in line with data protection laws, regulations, things like GDPR, okay? So something just to be conscious of. Now, in terms of the extras, so this is the upsell process. This is where we sell extras, additional products. So the counter staff, they offer you optional extra insurance. Now, they actually flag there in this extract. And remember, this is coming from accelerate.com. So the company has basically published this information in this scenario. They say that it's optional extra insurance. And they also say that it's entirely your choice. You don't have to get this extra insurance. It's not a legal requirement. So that shows to me that this organization has ethics, okay? They're being straightforward. They have integrity. They're being honest. They're being truthful. So remember, integrity is a principle of the CIMA Code of Ethics, which basically means being straightforward, honest, and truthful in your dealings with customers and in your professional relationships. Okay, so what we're showing here is that Accelerate is an ethical business. Okay, just based on this, we know that they're following the ethical principle of integrity because they're being honest with customers. They're saying, look, you don't need this insurance. It's an additional extra, because remember, the basic insurance is already built into the fee. Now, payments. So this is very standard. If you haven't pre-booked and maybe you're looking to purchase extras, you have to get a pre-authorization. So this pre-authorization is very standard. You'll see this in hotels, lots of different industries. Basically, the company would pre-authorize your card. So that takes a deposit on your card. So if anything happens to the car, then that would come out of your deposit. Okay, so this is, I suppose, some security for Accelerate. So basically with payment, you pay for the car if you haven't pre-booked, you pay for any extras that you want to add to your rental, and then when you go to get the car rental, you do this pre-auth or pre-authorization process. It's very, very standard in this industry, very standard in industries like hotels, maybe room rental as well, where basically you're placing a security deposit using your card. Okay, so then we have some information in regards to signing the rental agreement and then getting the keys. So it says, don't feel rushed into signing the rental agreement. Give it a good read through first. So again, showing that the business has integrity. They're being honest with their customers. They're saying it's important that you read through it. You have to read it. Don't just sign it straight away. Okay, so they're being honest with customers. They're being open. They have integrity as an organization, just based on these two different elements. Now, something that I find quite interesting is that it's all done on paper, would appear. It says keep the documents safe. So you would expect over time that would become digital as the company becomes a little bit more digitally focused. You would expect that the documents are given maybe via phone, maybe via an app or something like that, and you would be able to read them on your phone. So if anything happens to those documents, you still have a digital copy, because you could spill coffee, maybe you could rip them, you could lose them. So it makes sense for them to be stored digitally instead of being given on paper. Okay, so once you've signed the agreement, the counter staff give you the key and they tell you where to find it. Now, I found this quite interesting. So take a good look over the car. If you find any issues with it, ask our staff to record the damage before you leave the car park. Okay, so why would this happen? I was kind of thinking about this when I read through the pre-scene. So, why would this happen if we're a premium supplier, if we're a premium brand in this marketplace? There really shouldn't be any issues with the car when the customer gets to it. Think of the reputational impact of that. The customer is just getting their car and they notice there's a defect. Okay, there's going to be some kind of reputational issues. We may be taken less serious as an organization after that experience by the customer, because they may feel that Accelerate's not taking care of their cars. They don't really care about their customers. So this is something that we should avoid at all costs, okay? This is really not a good thing to happen to our customers. They get to their car, they find there's something wrong with it, and they're flagging it up with Accelerate. Okay, so that pretty much ends this session, the pre-scene analysis part 1. Okay, so in part 2, we'll cover the rest of the pre-scene analysis. We'll look at the financials of the organization in detail. We'll look through the budget information, and we'll also run through the supplementary information on connected car technology and CAAS, cars as a service model. Okay, so what I'm going to do is I'm going to exit the screen and I'm going to go into the chat box and I'm going to just have a look at your questions. Okay, so this is a Q&A session now. So if you want to ask any questions at all, feel free to put them in there. I'm just going to run through some of the questions that perhaps you had as I was going through this pre-scene analysis. Very often what we do is we ask the questions more so at the end of the session, but sometimes people put them in during the session, which is fine. But I'm just going to have a look and see, was there any questions for different customers or different students there? Okay, so yeah, I'm just looking, is there any questions? Linda says, is it possible for you to share a recording on the session since it has gone over the allocated time of 1 hour? Linda, I think the session was for 2 hours, but a replay will be sent out in 12 hours. Yeah, as Thomas said there. A man says, sir, but last session's recording was not sent. Will a version of this annotated pre-scene? Okay, so Aman, I just want to have a look at that comment there. So, sir, Last session's recording was not sent. If you could just tell me, which session that was, that would be helpful, and I can chase that up for you. Tom, will a version of this annotated pre-scene be shared? Yeah, so if you are an all access member, the annotated pre-scene document is inside the course. So yeah, you'll have a copy of that, Tom. So hopefully that answers your question. Benjamin, when are you having a break? Okay, so I'm really sorry. I just thought it would be a good idea to go through the entire pre-scene document. We didn't take any breaks. Sorry about that, Benjamin. Ryan, okay, Tom, I found the resources on the website. If you're signing up to All Access, you should see the annotated pre-scene. Ryan, thanks for answering that question. Yeah, so there is the pre-scene document annotated inside the All Access. When you click on the OCS course, it should be within, you go core materials, and then I think it's just on the right, you'll see PDF annotated notes. Okay, AH, is there a break imminent? Okay, so unfortunately, we didn't have any breaks. I do apologize for that, guys. But if you have any questions related to the pre-scene, or maybe the all access offering, or maybe the elite class that Thomas talked about, I'm quite happy to answer your questions on that as well. Okay, Tom, I'm an all access member, so I'll have a look. Brilliant. Okay, so Lenora, hey, sorry, I joined in a little late with regards. I only got a bit with regards to the 2 study packages available. Okay, so Lenora, basically what you missed was in the offers section, you'll see there's the all access package, which you can avail of. And basically this is just a all access for 12 months, £229. It's 365 days access to all of our courses, which is, E1 all the way through to SCS. Some really, really good content in there. You have the mock papers as well are included, all of our on-demand content, all of the case study content. So that's an excellent offer. And then we have the elite course offering. Okay, and there'll be an email sent out, I think today, maybe tomorrow, sent out in regards to that. And that is where you have 6 sessions on top of all of the sessions that we're running live for this OCS course with a tutor who's experienced with the OCS paper. And what you'll do is you'll look at things like exam technique. How do I put together an answer? What are different questions that could come up in my paper? And as well, you'll have 2 one-to-one calls with that tutor, 30-minute calls, where you'll be able to talk about perhaps some issues that you're having. Maybe it's content related, maybe it's study related. So you'll be able to talk to a talented and experienced tutor. Okay, in this case, it's Kelly Davison. She's a very experienced tutor. And as well, you get 3 mocks corrected. Okay, so Lenora, you'll receive an email maybe today, maybe tomorrow on that elite course offering. But the all access is there inside the offers button. If you just want to click on that button, you'll see what that offer is. Okay, so Luke, question of the cascade cars. Aren't cars mainly used for 12 months? So if the car was in the middle segment, would they extend the life of the car by another 12 months and drop it into the low cost? So Luke, it depends. I suppose you're right. The cars are used for about 12 months. Okay, so the cars are current assets to a certain extent. They're not really non-current assets, and we'll talk more about that in part 2. But you are right. If, for example, Accelerate was to take the car 6 months into its life and move it into another area, that would be cascading the car by, I suppose, just moving it into a different area. If, for example, we were to extend out the holding period of the car, so the useful life, maybe we say, okay, instead of selling the car after 12 months, what we do is we keep the car for 4 years or 5 years. We extend the life within the business. Instead of selling the car, what we do is we try to get value from the car by moving it into other brands. So the cascading is just moving it into other brands. We could do that within the 12 months if we wanted to. Maybe we find that we want to move a car from premium into the kind of mid-tier. But if we want to extend the life, then we would have to own the car, for longer than 12 months. So you're right there. Thanks for highlighting that. Katie Bennett, or Katie Bennett, sorry. I did E1 under the 2015. I know there's been a huge change. What are the key points to look out for? Yeah, you're right. There's been a massive change. Okay, so E1 completely changed altogether. It's the biggest change out of all the subjects on the CIMA syllabus between 2015 and 2019. So I recommend for this particular case that you spend a bit of time looking at all of the topics focused on digital technology, which are pretty much, I suppose, the kind of IT department. Basically, E1 is now all around different departments in an organization, how we would have KPIs for those different departments, and digital technology in general. So focus on digital technology. A lot of the chapters are quite interesting, if I'm being honest. Really focus on KPIs. How would we measure performance? Okay, that is still a part of E1. And think about it from the perspective of technology, operations, commercial partnerships, functions of a business. How would we have KPIs? How would we generate KPIs and interpret those KPIs as well? Data analysis as well as a part of P1, but big data analysis, business intelligence, all great topics to be conscious of. Business process reengineering as well as part of this particular pre-scene. I recommend having a look at those. Okay, Dominic says, do we need to go over all of the content from E1, P1, and F1, or just these specific topics? If so, which please? So Dominic, yeah, you do need to have a look at everything in E1, P1, and F1. I know that sounds like an easy thing for me to say. I know they're very, very large areas. I sat this exam myself. So the OCS exam, I was a prize winner, a world ranked prize winner. And I'm not saying that to brag, but I'm saying that to basically tell you I have been here. I've sat the exam myself. So I know how hard it is to go through E1, P1, and F1. They're massive topics. But I would recommend that you look at all of those areas, because anything can come up in your paper. If you speculate too much, you leave yourself vulnerable. If something comes up, you're not prepared for it, for example, that could be an issue. So you have to look at everything. The reason why I'm highlighting different areas is just so you understand how it could be examined on your paper. So for example, they're closing down sales locations. Well, a possible question could be around IFRS 5, non-current assets being held for sale and discontinued operations. So it would make sense. We're selling buildings. Maybe we make a building become an asset held for sale. Maybe it's equipment that we're selling as part of a maintenance center location close. Okay, so these are just things to think about. How could this content be tested? Okay, so that's what we're talking about when we look at the different areas, how it could be examined on the paper. It's just to kind of think about the content and how it could be applied. Okay, so I recommend having a look at some of the areas that we talked about. Certainly important to look at IFRS 16 for this paper, leases, IAS 16. Okay, chances are, Dominic, you're going to get at least one standard being tested on your paper. So IAS 16, IAS 10, IAS 2, IFRS 5, IFRS 16. There's not many standards on the syllabus. Okay, so if you kind of understand them quite well, it's not too bad. Okay, so hopefully that answers your question, Dominic. Cover all areas, but the areas that we talked about, maybe have a look at them after this session just to make sure that you understand them. Okay, Mfo, I hope I'm pronouncing your name correctly. I'm very sorry if I didn't. Are you going to provide an analysis of the financials as well? So we're going to do that in part 2. Okay, so part 2 is on Monday. Okay, 7 p.m. GMT, so UK time, basically. Okay, we're going to do that on Monday. Now, you have to be an all-access member for the second part. So in the offers, you have the all-access membership. If you sign up for all-access membership, it's 365 days access to all of our content. You can have a look at the second part. I'll be in it. Okay, I'll be delivering basically the same type of lesson, but we'll be running through the financial ratios, running through the budgeting information, running through the management accounting information. Also, there's some information there on costings. Okay, so very much P1 related, and some information on the supplementary articles that have been given, which is on connected car technology and CAS, cars as a service. So Sharan, when are you going to run through the second half of the pre-scene? Hopefully that answered your question. Siaj, how many total case study we have to prepared for exam? Okay, so I'm not really sure. If you could clarify the question, I'm not 100% certain what you are referencing. A man, okay, so sir, it was taken on March 31st. Okay, so, or March 21st, sorry. Was this the technique session, Aman? If that is the case, I think you're talking about we had a session to do with OCS answer technique. And if that's the case, you didn't get a copy. What I recommend is have a look at your spam folder. Sometimes it actually comes into your spam folder. If you did not receive a copy of that class, and you were signed up for it, then email info@vivatuition.com and we'll sort that out for you. Okay, man. So if you were signed up, you were registered for that session, that was the OCS answer technique session, and you didn't get a copy of the recording, just email info@vivatuition.com. Okay, and we'll sort that out for you. So hopefully that will resolve that for you. Okay. So I hope I'm pronouncing your name correctly, okay? So I'm very sorry if I haven't. Netebeleng, okay? So again, I'm really sorry if I didn't get that correct. Will I have access to this material even after this webinar? I've not yet enrolled. So this is a free class. So yeah, you'll receive a copy of this in 12 hours time, okay? And if you want to go to part 2, the live session, or if you want a recording of part 2, the industry analysis, E1, P1, F1 applied, and all the content on our website. It's just a case of signing up for that offer. It's a great offer, great price, $229 for all access. So you'll get a copy of this, yeah, no problem at all. But if you want the second half, you want the extra materials, you want the annotated notes, just sign up for the offer. It's a fantastic offer. So that hopefully answers your question. Ryan says, a lot of topics allude to risk and uncertainty. Would you suggest revising this in detail or to cover this briefly, as E1 is assessed less in the OCS in comparison to F1 and P1? So Ryan, you're completely right. If you look at the papers, the exam papers for the OCS paper, it's only 2 windows available on the cgma.org website. You're right. P1 is massively tested on this paper. There's no denying that. If you go inside the exam papers, you'll see it's dominated by P1. So P1 is really important to know. Okay, I would place emphasis on P1. F1 is tested. Yes, you're right. It comes into the exam in the form of applying standards very often. Sometimes there's questions on things like taxation, nothing too heavy, things like capital allowances and that kind of stuff. And there are sometimes questions on corporate governance and ethics as well, which is part of F1. So I think you're right. I think you should spend, if you're limited on time, you're constrained on time. I mean, in an ideal world, you should spend as much time as possible going through all 3 of them. But if I was going to prioritize, P1 is the most important, then F1, and then E1. E1 gives you context for the questions, and it helps you with content for your answer. It also helps with the questions around generating KPIs, which tend to come up. Okay, so that's quite a common question. Generate a KPI that will measure the performance of this, or monitor the performance of this. So E1 is useful for that. Now, P1, as you said, is heavily focused, and risk and uncertainty is certainly an important topic for this particular pre-scene, because you could have a question around expected values, what if analysis, mini-max, maxi-max, maxi-min, around going into a new area, perhaps new direction for the company, new business models. You're totally right. Risk and uncertainty would be a good one to know. So to answer your question, cover all of them if you have time. If you don't, if you're constrained, P1, then F1. Make sure you know your standards well, and then E1 after. And I would look at risk and uncertainty. I think that is certainly an important topic. It's been tested so much in the last few papers. I just think, it's good to know it anyway, regardless of whatever pre-scene comes up. Maria, this pre-scene analysis is the same scenario that we'll be given in our exams, but we don't know the questions on this till the day of the exams. Yeah, Maria, that's it. Yeah. So this pre-scene, the scenario inside your paper will be based on this pre-scene. And inside your paper, you actually have a digital copy of this pre-scene document as well, not annotated. Okay, so it'll be annotation free. And, this is what's going to be the scenario for your paper. Okay, you are right. We don't know what the questions will be. Okay, sometimes it's interesting to speculate, to kind of think about what kind of questions could come up in your paper, but ultimately we don't know. You're completely right. And, we can get a surprise, we could get a shock. Okay, so it is important to think about what questions could come up, but it's equally important to be a master, an expert at all areas of the syllabus. Okay, that's the way you're going to guarantee a pass. Okay, so thanks very much for bringing that up, Maria. Okay, I say, Pranav, ready. When is session 2 conducted? So hopefully, I answered that question already, but hopefully you will be aware that this session is a free session. If you're an all access member, on Monday, we'll run through part 2. Tomorrow, we actually have an industry analysis based on this industry as well. So that'll help you. Okay. if you're looking to get all access membership, it's there in the offers button. If you click on the offers, you'll get a discounted offer there for, I just see you've typed the question in again. When do we get a recording of this session? So to answer your question there, in totality, you'll be given a recording this 12 hours after, okay? As well, if you're looking to get a recording of the second session, you have to be an all access member. There will be a recording of this inside your account as well. If you're an all access member, you'll have access to this particular session as well, okay? So again, all access is there in the offers button. You'll see 229. So it's a great offer, okay? So to answer your question, the next session is on Monday, 7 p.m. GMT. I'll be teaching it. I'll be there running through the financials of the organization pretty much. That's the main topic. Benjamin, should we practice answering questions for other pre-scenes or focus on this pre-scene alone? So Benjamin, it's a good question. Yeah, I mean, what should you be doing in terms of practice? Well, first and foremost, if you're an all access member, you've mock papers which you can sit. Okay, now I wouldn't recommend sitting them now. Okay, it's just out, so maybe give it a bit of time. But it is a good idea to go into the past exam papers and just look at the types of questions that come up and ask yourself, well, if that question came up for Accelerate, how would I answer it? And if you have time, it's a good idea to actually write out an answer. So some of the questions are quite generic, which means they apply to lots of different pre-scenes. So maybe it's a good idea to have a look through and just think to yourself, well, how could I answer this question if it came up for Accelerate? So what would I do? In short, I would not learn another pre-scene documents. I wouldn't go over other pre-scene documents, but it is a good idea to look at exam papers on the cgma.org website. Have a look at them and see how would you approach those questions if they came up for your particular case, which is Accelerate. Okay, so maybe apply Accelerate to those questions. Some of the questions, like I said, are generic, especially the ones on financial standards. So how do you apply IFRS 5 to piece of equipment that's being sold? Or how do you use digital costing to get a per unit cost of an app? So, all those kind of things you could apply to Accelerate as well. Jessica, how do I register for the other live sessions? I already have all access membership. So I believe there'll be an email sent out today, Jessica. If you don't get one, email info@vivatuition.com and you'll get a link for all of the upcoming sessions. Okay, so if you haven't got a link already, I'm not 100% certain if they've all been sent out. If they haven't, they should be sent out today. But I recommend, if you don't have a timetable, don't have a schedule, anything like that, then info@vivatuition.com, Jessica. I would suggest. Okay, if you want, you can private message me your email and I can try and sort it out for you as well if you feel comfortable doing that. If not, if you want to email info@vivatuition.com, that's perfectly fine as well. So if you want to direct message me, just remember you have an option there to directly message me so other people won't see it. Obviously, you don't want to put your email in the chat box. Okay, so whatever way you want to do that, that would be totally up to you. Okay, Ryan, does Viva provide everything you need to know to be best prepared, or is it useful combining two services? So yeah, Ryan, I mean, obviously I'm biased. Viva has everything that you need to pass, but if you do want to use other services, that's totally fine as well. So we have some students that maybe they may use the Kaplan textbook. They may use, a different tuition providers' materials as well as ours. Okay, and that's the great thing about the price of all access is that you can afford basically to use multiple tuition providers because it's a great price. So Ryan, we have everything that you need to pass this exam. But if you want to use supplementary materials, if you want to use other people's materials as well as ours, that's perfectly acceptable. That's perfectly fine. I know myself, I like to use different materials. Sometimes get a different person's perspective. It's good. Okay, so we have everything that you need to pass this exam. Okay, I think the all access is brilliant because you get access to not just the OCS, but also E1, P1, and F1. So if you've maybe it's been a while since you've looked at F1 or something like that, you can have a look at the content. But, of course, if you want to mix it up, that's totally fine as well. So Benjamin, any tips for time management? Yeah. Okay. So there's 45 minutes per section. Okay. So you have to be conscious of that first and foremost. Katie, I see your private message to me. There actually isn't one. So, what might be a good idea, Katie, if you direct message me your email, I can send that over to you after this session. How about that? Okay, so if you just direct message me, or if you want to email info@Viva Tuition, you'll get the link for that as well. But if you want to email me directly, or you want to message me directly, if you give me your email, I'll email you myself, okay, if you want me to. Okay, so to answer your question, Benjamin, there's 45 minutes per section, okay? Maybe 5 to 6 minutes, 5 to 7 minutes reading the question. Whatever's left, you allocate that out depending on the time requirements given to you inside the exam. So you'll have different subtasks in the exam, and they'll have percentages beside them. You should use that to divide out your time. Okay, so you basically get your 45 minutes, deduct off maybe 6 minutes, 7 minutes, depends on how long the question is. Whatever's left, then you divide that out depending on the time allocations given to you in the exam. And with time management, what's really important is you don't go over the time for a subtask, okay? So you may have a situation where you overrun on time, and that's fine. If it's like 60 seconds, it's okay. But if it goes over that, you have to just be disciplined and go into the next subtask, okay? Because if you think about it, applying Pareto's principle, it's quite okay. It's relatively straightforward for students to obtain the bulk of the marks, 80% of the marks for the question. But it takes a lot of time to get the last few remaining marks. So the key to time management is when you're done in terms of the time, move on to the next question, okay? So allocate your time out depending on the time requirements and be disciplined with your time, okay? So that's really, really important, Benjamin. Okay, Katie, I see that. Yeah, no problem. I'll get in touch with you myself, okay, in regards to that issue. And Dila, do you get access to textbooks if you're an all-access member? Yeah, you do. So you get access to the BPP textbook for all of the objective papers. So F1, P1, and E1, as well as P2, F2, and E2, and F3, P3, and E3. Okay, so you get 9 textbooks, okay? And it's a digital copy, so you're able to view it on our website, and it's the BPP textbook, okay? So it's quite a good textbook, okay? A little bit smaller than the Kaplan one. Some people say the Kaplan textbooks are very long. Again, it's personal preference. They're both very good. I use both of them, so you do get textbooks as part of that. Okay, guys. So, thanks so much for all the feedback as well. I really appreciate it. I see people saying thanks. And do you sell individual packages as well, such as mock exams? Yes, if you go on the website, you just go vivatuition.com, you'll see we do sell mock papers as well. We sell objective test questions. Also, if you get mock papers with us, you have an option to get it professionally marked as well. That's an additional service that we offer. That's a great service, if I'm being honest. You get feedback on your paper, which is really useful. There'll be kind of notes inside your sheet that says where you've gone wrong, where you could do better, some tips for your real exam. So, we offer, individual services as well. I would recommend, it's completely up to you what you decide to do. I would recommend thinking about the all access because it's a really good offer in terms of the long-term getting through the qualification. If you think about paying on a subscription basis, is probably a good idea if you're at the OCS level because you have access to the next level as well, the MCS. So if you pass this exam, you'll all hopefully pass this exam, of course, and you go on to the next stage, then you'll have content there for you as well. Okay, Anita, how should we practice for the exam from now on? That's a really good question. So I recommend having a look at all of the major chapters from P1 and F1 and having a kind of an overview of E1 as well. So what you should be doing is looking at the content. Make sure you're an expert at the content. The OCS is all about being able to apply the P1, F1, and E1 content. So you should be an expert at the technical elements of the exam, okay? So, for example, activity-based costing, linear programming, IAS 16, you should know these theories really well. So if they come up in your paper, you're guaranteed to do well in the question, as long as you make sure you're writing a good comprehensive answer, a nice layout, for example, as well. So I recommend having a look at the content, whether that means reading the textbook, whether that means using videos, whatever you like to do yourself. I recommend doing that at this stage. As well, have a read through the pre-seen document on your own time. It's great to do this analysis. Hopefully you found it useful, but it's a good idea to do it in your own time as well. Become an expert in the pre-seen because one of the aspects of the exam is applying the pre-seen to the scenario. okay, or applying the question content in your answer as well. So that's called the unseen information. So the application of the pre-seen and the unseen is a great way to get marks. Okay, so it's important that you spend a bit of time reading through this pre-seen as well, Anita. So become an expert at the content, P1, F1, and E1 in that order, I would suggest. And also spend a bit of time going through the pre-seen document. Make sure you understand it very well. Okay, Luke says, there's an essential package for £99. Would that include the next pre-seen review? I'm not 100% certain, Luke. I'm actually not 100% certain. I'm not fully sure of that. I think so. I think the answer is I believe so. I just I don't want to promise you anything. But if you email info@vivatuition.com, we'll be able to help you with that. I believe that is the case. Okay, but again, I'm not 100% certain. So I'm sorry, I wasn't able to give you a great answer there on that one. Benjamin, how long does it take to get feedback on the papers? It should take about 48 hours. It depends on when it was submitted. Was it submitted on the weekend? That kind of thing. It should take about 2 days. Okay, so that's ideally the case. Nessa, so will this analysis be provided in PDF? It's on the Viva Tuition website. If you're an All Access member, yeah, you get a kind of an online copy of this. You're able to view it inside our own PDF reader. And Dila, do you have to take the mock exam under exam conditions if you purchase marking options as well? Yeah, I mean, yeah, you do. You have to take it under exam conditions. I mean, to be honest with you, I would recommend taking it under exam conditions under any circumstances, whether you're getting professional marking or not. So if you're not even getting marking services, I recommend doing it under exam conditions, because a part of doing exams, Andila, is you have to get good at dealing with time pressure, because that's such an important aspect to this exam. Like I said, I've sat the exam myself, so I know how difficult it is to get through it in 45 minutes per section, 4 sections, 3 hours for the full paper. Getting good at that is a skill, and you have to get good at that before you sit the exam. So I recommend any mock papers you do them under exam conditions, okay? Maria, I recognize the name, Maria, so thank you very much. I really appreciate that. The All Access, I know I keep on saying it, okay, and obviously I'm biased, but it's a great service. And, like we were saying earlier, it's a great service in its own right, okay? So we have everything that you need to pass your exams throughout the entire qualification. But as well, if you want to use other people's materials as well as ours, that's totally fine. And, the great thing about it being 229 means that you could get, mock papers as well from another provider if you wanted to, and our service as well. So, that's the great thing about having that price. You'll know as a student that some courses are like £700, £800. We're priced very, very competitively. That All Access membership is an excellent price. So it's totally up to you if you want to take that or have a look at it or just think about it for the next few hours. Totally up to you. But I recommend having a look at it. And, Maria, I don't completely agree with you. Okay, guys, so it's 2.5 hours in. So I think this is a good time to probably end the session. Okay, so remember, we have a second session together, and that is on Monday, 7 p.m. GMT. Okay, that will be, of course, recorded, and that'll be put up on the website. If you're an All Access member, you'll get a copy of that. So if you can't attend that live session, no problem. Okay, so I'll see you in that session. Tomorrow as well, there's an industry analysis. If you're an All Access member, there's an industry analysis, and you'll be able to do that with Hugo Newman. He's an excellent tutor, really knows his stuff very, very well. So I recommend you have a look at that as well. And that'll be inside your All Access account, recorded as well, after the session has ended, a few days after. And Dina, do you have to pay in full? Yeah. For the All Access, yeah. For the Elite course, no. For the All Access, you do have to pay up in front. In full, sorry. Okay, guys, so I'm going to close the session. Again, it's been an absolute joy teaching you all today. Hopefully you found the session useful. I really, really, really wish you the best of luck, guys, in your OCS exam. Even if you don't see me again, I really, really wish the best of luck for all of you inside the OCS exam. This is a great time to do your exam, okay? So this is, the first window, May 2021, great window to do the exam, okay, guys? So I really, really am wishing you the best of luck with this OCS paper. We can all do it. We can all get through it. There's loads of time to study at the moment, okay? So let's take advantage of the fact that we have a lot of time until the exam. Let's get really comfortable with the content and pass this paper, the OCS paper, okay? So everyone, thank you for your questions. Thank you so much for all the positive feedback. The guys that have emailed me or DM me, I will be getting in touch with you. All the positive feedback, I totally appreciate it, guys. So I'll see you for that second session on Monday. Best of luck with your studies. And again, OCS paper, let's get it passed in May, okay?